149 points, up by 6.9%. S&P, by the way, now at 2387. The Dow Jones Industrial Average at 19,977. It is up 1,384 points. That is a gain right now of 7.5%. NASDAQ surging 5.8%, right now higher by 397 points. Facebook eyeing a multi-billion-dollar stake in Reliance, this according to the FT. Stocks rallying as investors rediscover some appetite for risk, with Congress looking close to an unprecedented spending bill to prop up the slumping economy. The dollar halting a 10-day rally. S&P rebounding from the lowest level since 2016, poised to notch a third straight Tuesday turnaround after starting this week with a rout. Again, recapping here, stocks higher, S&P up 151, the 10-year, the yield there 0.82%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie. New York State Governor Andrew Cuomo has been a leader. He is making some comments about the coronavirus in New York State, which has been the epicenter, talking about some new ventilators, as well as just how long potentially the lockdown could continue. Let's listen in.
Has gone up. We have the most sophisticated people you can get doing projections on this. They've been studying projections from China, South Korea, Italy, places all across this country. And what they're now seeing is that the rate of cases, the rate of new infections, is doubling about every 3 days. That is a dramatic increase in the rate of infection. And this whole discussion all along has been, how fast does the rate of increase spread? And can we slow the rate of increase? We're not slowing it, and it is accelerating on its own. One of the forecasters said to me, we were looking at a freight train coming across the country. We're now looking at a bullet train, because the numbers are going up that quickly. And the most challenging point about the increasing numbers is where the numbers will apex. What is the high point of the numbers? And the apex is the point where we have to be able to manage the capacity. We had projected the apex at about 110,000 hospital beds, and that's the number I've been talking about. The new projection suggests that the number of hospital beds needed could be as high as 140,000 hospital beds. So flatten the curve, flatten the curve. We haven't flattened the curve, and the curve is actually increasing. That means the number of hospital beds, which is at 53,000 beds, 3,000 ICU beds, the anticipated need now for the height of the curve is 140,000 hospital beds and approximately 40,000 intensive care unit beds. Those are troubling and astronomical numbers, and as I mentioned, are higher numbers than had been previously projected. We are exercising all options as aggressively as we can. That rate of increase, that apex, they project at this time could be approximately 14 to 21 days away. So not only do we have a spike in the increase, when you spike the increase in cases, it accelerates the apex to a point where it could be as close as 14 to 21 days. We're exercising all options. We're doing everything we can on every level to, quote unquote, slow the spread, flatten the curve. We've closed businesses. We've reduced street density. We had an issue in New York City. I spoke to Mayor de Blasio. I spoke to City Council Speaker Corey Johnson. We'll have a plan that I believe will be in place by noon today. And we have increased testing to the highest level in the United States and the highest per capita level on the globe. No one is testing more than we are testing. So in many ways, we have exhausted every option available to us. We've closed all the businesses, we've reduced the street density, and we've increased testing to the highest level in the country. We're also trying all the new drug therapies, the hydroxychloroquine, which the president speaks about and is optimistic about, and we hope for optimistic results also. We're actually starting that today. The president and the FDA accelerated that drug coming to New York. So the hospitals will start using that drug today. The FDA also authorized an experimental procedure by the New York State Department of Health where the Department of Health actually takes plasma from people who are infected, who have the antibodies, and will try putting that plasma into a person who is still struggling with the disease, hoping that the antibodies make a difference. We're also pursuing a new level of testing, which will test people's blood to see if they have antibodies for the coronavirus, which means they may have been infected and resolved and never knew it. But if you had the coronavirus and resolved, you now have an immunity to the coronavirus for some period of time. Most experts suggest it's a significant amount of time. That would be very important for us to know, because these are then healthcare workers who could go back to work. These are workers who could return back to the private sector. But the inescapable conclusion is that the rate of infection is going up. It is spiking. The apex is higher than we thought, and the apex is sooner than we thought. That is a bad combination of facts. So slow the spread. We'll still keep doing everything we can, but it is clear that we must dramatically increase the hospital capacity to meet that highest apex. And we have to do it very quickly. Again, the apex could be here in as little as 14 to 21 days. And you're talking about a very significant logistical, operational movement to increase that number of hospital beds and do everything that you need to do related to the increase in hospital beds. There are three elements that are necessary to increase the hospital capacity. First are obviously the availability of the beds. A bed without staff is virtually useless, and a bed and a staff without the right equipment is virtually useless. So you have to complete all three at the same time. As far as beds, we have told the hospitals, I'm going to speak to every hospital administrator today, hospitals must increase their capacity by 50%. The goal is to ask them to try to increase it by 100%. Remember, we have 53,000 beds. We need 140,000 beds. Even if they did increase it by 100%, you'd only be at about 100,000 beds. You need 140,000 beds. Emergency hospitals like the 1,000-bed facility that's being built here will be helpful. The emergency hospitals that we're building at Westbury and Stony Brook and at the Westchester Convention Center will be helpful. But they're no way for 14 days consecutive or around-the-clock shift. So we'll need a backup reserve staff and equipment, masks, PPEs, and ventilators. And of those three, the greatest critical need are ventilators. Now, ventilators, you say ventilators, nobody really knows what you're talking about. The people who are going to come in, the people who will have acute needs, these are people who are under respiratory distress. They need a ventilator. The ventilator will make the difference between life and death, literally, for these people. This is a piece of equipment that in the normal course of business, you don't have a need for high levels of ventilators. And our hospital system has about 3,000 or 4,000 that has always met the need. This is a dramatic increase in the number of ventilators that you need. We have been working around the clock, scouring the globe. We've procured about 7,000 ventilators. We need, at a minimum, an additional 30,000 ventilators. You cannot buy them. You cannot find them. Every state is trying to get them. Other countries are trying to get them. The capacity is limited. They're technical pieces of equipment. They're not manufactured in 2 days or 4 days or 7 days or 10 days. So this is a critical and desperate need for ventilators. We're going so far as to trying an experimental procedure where we split the ventilator. We use one ventilator for 2 patients. It's difficult to perform, it's experimental, but at this point we have no alternative, so we're working on this experimental application. Picture 2 hospital beds, 2 people in beds, 1 ventilator between the 2 of them, but with 2 sets of tubes, 2 sets of pipes going to the 2 patients. Again, it's experimental, but necessity is the mother of invention, and we are working on this as we speak, because life is options, and we don't have any other options. There is no other way for us to get these ventilators. We've tried everything else. The only way we can obtain these ventilators is from the federal government, period. And there's 2 ways the federal government can do it. One is to use the Federal Defense Production Act. There is a federal law where the federal government can say to manufacturers, you must produce this product. I understand the federal government's point that many companies have come forward and said we want to help, and General Motors and Ford and people are willing to get into the ventilator business. It does us no good if they start to create a ventilator in 3 weeks or 4 weeks or 5 weeks. We're looking at an apex of 14 days. If we don't have the ventilators in 14 days, it does us no good. The Federal Defense Procurement Act can actually help companies, because the federal government can say, look, I need you to go into this business. I will contract with you today for X number of ventilators. Here is the startup capital you need. Here's the startup capital you need to hire workers who do it around the clock. But I need the ventilators in 14 days. Only the federal government has that power. And not to exercise that power is inexplicable to me. Voluntarism is nice, and it is a beautiful thing. And it's nice that these companies are coming forward and saying they want to help. That is not going to get us there. And I do not, for the life of me, understand the reluctance to use the Federal Defense Production Act. Also, the federal government has 20,000 ventilators or thereabouts in the federal stockpile. Secretary Azar runs an agency called HHS, Health and Human Services. I asked the secretary, look at the first word in the title of the agency you run. It is health. Your first possibly dying because they can't get a ventilator, but a federal agency saying, I'm going to leave the ventilators in the stockpile. I mean, have we really come to that point? Also, we have to be smarter about the way this is being done. The federal government has to prioritize the resources. Look at where the problems are across this nation. California has 2,800 cases. Washington State, 2,200 cases. Florida, 1,200 cases. Massachusetts, about 800 cases. New York has 25,000 cases. New York has 25,000 cases. It has 10 times the problem that California has. 10 times the problem that Washington State has. You prioritize resources and your activity and your actions to where they are needed. And New York, you are looking at a problem that is of a totally different magnitude and dimension. The problem is the volume. Dealing with 2,000 cases is one thing. 2,000 cases, frankly, we could deal with in this building with the capacity that we're providing. We have 25,000 cases. We need the federal help, and we need the federal help now. Also, there is a smart way to do this. Deploy the ventilators around the country as they are needed. Different regions have different curves of the infection. New York is the canary in the coal mine. New York is going first. We have the highest and the fastest rate of infection. What happens to New York is going to wind up happening to California and Washington State and Illinois. It's just a matter of time. We're just getting there first. Deal with the issue here. Deploy the resources, deploy the ventilators here in New York for our apex, and then after the apex passes here, once we're past that critical point, deploy the ventilators to the other parts of the country where they are needed. I'm not asking for 20,000 ventilators and they stay in New York and they live in New York and change their residence. As soon as we finish with the ventilators, then you move them to the next part of the country that has the critical problem. And then after that region hits its apex, then you move to the next part of the country that has its critical problems. I will take personal responsibility for transporting the 20,000 ventilators anywhere in this country that they want once we are past our apex. But don't leave them sitting in a stockpile and say, well, we're going to wait to see how we allocate them across the country. That's not how this works. They're not simultaneous apexes. They are a curve that is individual to that region. Deploy to that region, address that region, and then move on to the next. And I'm not only talking about ventilators. We get past the apex. We get over that curve starts to come down. We get to a level where we can handle it. I'll send ventilators. I'll send healthcare workers. I'll send our professionals who dealt with it and who know all around the country. And that's how this should be done. You know it's going to be on a different calendar. It's going to be a different sequence. Let's help each other. New York, because New York is first. And then after New York and after the curve breaks in New York, let's all rush to whoever's second. And then let's all rush to whoever is third. And let's learn from each other and help each other. I want to make a point on the president's point about the economy and public health. I understand what the president is saying. This is unsustainable that we close down the economy and we continue to spend money. That there is no doubt about that. No one is going to argue about that. But if you ask the American people to choose between public health and the economy, then it's no contest. No American is going to say, accelerate the economy at the cost of human life. Because no American is going to say how much a life is worth. Job one has to be save lives. That has to be the priority. And there's a smarter approach to this. We don't have to choose between the two. You can develop a more refined public health strategy that is also an economic strategy. What do I mean by that? Our public health strategy was a blunt instrument. What we said at a moment of crisis is isolate everyone. Close the schools, close the colleges, send everyone home, isolate everybody in their home. In truth, that was not the most refined public strategy. Why? Because it wasn't even smart, frankly, to isolate younger people with older people. But At that moment, we didn't have the knowledge, we needed to act, that's what we did. You can now start to refine that public health strategy. You can start to say, look, the lower risk individuals do not need to be quarantined. And they shouldn't be quarantined with an older person who they may be transferring it to. People who are recovered, you test them, you test the antibodies, you find out that they resolved themselves of the virus. And I believe once we get that test, you're going to find hundreds of thousands of people who have had the coronavirus and resolved. Once they're resolved, they can go back to work. Develop that test. It's in testing now. Once they're resolved, let them go back to work. Let the younger people go back to work. Let the recovered people go back to work. It's even better for the older, vulnerable people who you're trying to protect. And then ramp up the economy with those individuals. So you're refining your public health strategy, and at the same time, you're restarting your economy. Those two can be consistent if done intelligently. Restart the economy with our younger, recovered, tested workers. Don't make us choose between a smart health strategy and a smart economic strategy. We can do both, and we must do both.
To San Francisco.
It's not the economy or public health. It's restarting the economy and protecting public health. It is both. But I understand restarting the economy. The crisis today, focus on the crisis at hand. Focus on the looming wave of cases that is about to break in 14 days. That has to be the priority. And that is hospital capacity. And that is about providing hospital beds, providing staff, and providing equipment, and providing PPE, and providing ventilators, coming back to that number of 30,000, and needing federal action to address it now. If the federal government said today, I will deploy all 20,000 ventilators, it will take us 2 weeks to get those ventilators into hospitals and to create ICU beds and to locate the staff. So there is no time to waste. The time to do this is now. FEMA is sending us 400 ventilators. I saw on the news this morning. We are sending 400 ventilators to New York. 400 ventilators? I need 30,000 ventilators. You want a pat on the back for sending 400 ventilators? What are we going to do with 400 ventilators when we need 30,000 ventilators? You're missing the magnitude of the problem, and the problem is defined by the magnitude. These are the numbers from today. You can see our testing rate is now over 90,000 people who have been tested. That's the highest rate of testing in the country and per capita on the globe. We did 12,000 new tests since yesterday. Number of positive cases, state of New York, 25,665, 4,700 new cases of those tested. You see the entire state, county by county, more and more counties are being covered. We have 3,000 people currently who are hospitalized. We have 756 people in ICU units. The ICU units are the ventilated units. That's 23% of the hospitalizations. That's the problem. As the number of cases go up, the number of people in hospital beds goes up, the number of people who need an ICU bed and a ventilator goes up, and we cannot address that increasing curve. Again, you look at the number of cases in the country, you'll see that New York is an outlier in the number of cases. It's not even close. What is happening in New York is not a New York phenomenon, right? People in New York don't have a different immune system than other Americans. It's not higher in New York because we are New Yorkers. It's higher in New York because it started here first, because we have global travelers coming here first, because we have more density than most places. But you will see this in cities all across the country. And you will see this in suburban communities all across the country. We are just a test case. We are just a test case. And that's how the nation should look at it. Look at us today. Where we are today, you will be in 3 weeks, or 4 weeks, or 5 weeks, or 6 weeks. We are your future. And what we do here will chart the course for what we do in your city and in your community. I'm not asking you to help New York just to help New York. I'm asking you to help New York to help yourselves. Let's learn how to do it right. And let's learn how to do it right here. And let's learn how to act as one nation. And let's learn how to act as one nation here. And we learn the lesson here, we will save lives in your community. I promise you that. We're delivering supplies that we've been able to purchase. Today, New York City has had a critical problem. I spoke to Mayor de Blasio. He's right. He had a critical problem on PPE, gowns, masks, etc. The equipment we're bringing today will resolve that immediate need. There'll be no hospital in the city of New York who will say today their nurses, their doctors can't get equipment. And we're addressing that need not just for New York City, but also for Long Island and Westchester. We have acquired everything on the market there is to acquire. We've had a full team purchasing from companies all across this globe,
it might just be
buying everything that can be purchased. And we're bringing that here to distribute to New York City, Long Island, Westchester, because that is the greatest need. This number of supplies will take care of our immediate need. It does not take care of the need going forward 3, 4, 5, 6 weeks. The burn rate on this equipment is very, very high. I can't find any more equipment. It's not a question of money. I don't care what you're willing to pay. You just can't find the equipment now. But this will take care of the immediate need. I don't want our healthcare workers who are doing God's work. They are doing God's work. Can you imagine the nurses who leave their homes in the morning, who kiss their children goodbye, go to a hospital, put on gowns, deal with people who have the coronavirus? They're thinking all day long, oh my God, I hope I don't get this. Oh my God, I hope I don't get this and bring this home to my children. You want to talk about extraordinary individuals. Extraordinary. And it's the nurses and the doctors and the healthcare workers. It's the police officers who show up every day and go out there and walk into a situation that they don't even know what they're walking into. And it's the firefighters, and it's the transportation workers, and it's the people who are running the grocery stores and the pharmacies and providing all those essential services. Most of us are in our home, hunkered down, worried. They're worried, and they're going out there every day, despite their fear, overcoming their fear, and not for their family. They're doing it for your family. When you see them on the street, when you see them in a hospital, please just say thank you and smile. And say, I know what you're doing. What happens? All these facts, all these numbers. Am I strong in my language vis-a-vis the federal government? Yes, I am. But what happens at the end of the day? What does it all mean? That's what people want to know. What does it all mean? What it all means is what we said it all means the first day this started. The first day I went before the people of New York State and I said, I'm going to tell you the truth. I'm going to tell you the facts the way I know it. Those facts have not changed. Those facts are not going to change. This is not a new situation. We've watched this through China. There are hundreds of thousands of cases. 80% will self-resolve. That's why experts say to me, tens of thousands or hundreds of thousands of people have had the virus, didn't know they had it, and resolved. That's why we have to get that test that shows you had the virus because you have the antibodies. And you did resolve. And once we do that, that's how you get the economy back to work. That's how you get the backup healthcare workers. But 80% are going to self-resolve. 20% are going to need hospitals. It's not about that. It's about a very small group of people in this population who are the most vulnerable. They are older, they have compromised immune systems, they are HIV positive, or they have emphysema, or they have an underlying heart condition, or they have bad asthma, or they're recovering from cancer. Those are the people who are going to be vulnerable to the mortality of this disease. And it is only 1% or 2% of the population. But then why all of this? Because it's 1% or 2% of the population. It's lives, it's grandmothers and grandfathers and sisters and brothers. And you start to see the cases on TV. It's a 40-year-old woman who recovered from breast cancer but had a compromised immune system, and 4 children at home. That's what this is about. It's about a vulnerable population. I called the executive order that I passed Matilda's Law, my mother. It's about my mother. It's about my mother. It's about your mother. It's about your loved one.
And the idea
and we will
is,
do anything we can to make sure that they are protected. Again, keeping it in perspective, Johns Hopkins, 387,000 cases, studied 16,000 deaths on 387,000. 100,000 recoveries worldwide, 268,000 pending. Last point, it is about the vulnerable. It's not about 95% of us. It's about a few percent who are vulnerable. That's all this is about. Bring down that anxiety, bring down that fear, bring down that paranoia.
Giving a speech, giving an impassioned plea, really, to the federal government, trying to get some more ventilators, saying that we're getting 400 in New York State from FEMA, but we need, in New York State, 30,000, saying that it is the epicenter with 25,000 confirmed cases. He said that the number of cases were doubling every 3 days, and that not only is New York State not flattening the curve is steepening, and that will probably get to the apex, the peak of the infection rate in about 14 days, well faster than people had expected. The concern here, very much front and center, is the healthcare system. The idea that an estimated more than 100,000 hospital beds will be needed with ventilators in order to care for all of the people who are expected to get severely ill. I gotta say, Paul, listening to that speech, Governor Cuomo taking a very national view, saying that New York is the model for what is to come elsewhere, and frankly, sounding very nationally political, shall I say, in terms of taking leadership and saying, you know, we need a collective response that can help give a template to other cities and other states in the nation that are going to face the same thing that's going on here in New York.
Yeah, exactly. It was just a compelling set of comments by Mario Cuomo and Andrew Cuomo. And I think also interesting, Lisa, was really kind of calling out the federal government a little bit, saying this is what we need. We need some help from the federal government to meet
not a little.
Exactly.
He was very explicit, saying we need help. We are not getting it, and saying that basically there are these stockpiles of ventilators and that they just need to be released, with 20,000 ventilators that could potentially help to save lives. And he was basically saying, also, I think that, Paul, this is another really important point that he made, and that is President Trump has sort of speculated that perhaps allowing business to come online sooner would allow the U.S. economy to do better in order to stave off some of the drastic economic effects, which also are devastating to so many people. At the same time, there is a question about the public health concerns, and Governor Cuomo basically saying there has to be a balance where basically if you do the right thing for health, it will be the right thing for the economy, and maybe think more about how to get tests to figure out who has the antibodies that's already had it perhaps and didn't even realize, so that they can go back to work while the rest of the population gets the virus and can be catered to by a healthcare system that is not as overburdened as it otherwise would be. And as we're seeing currently in New York City and certainly in Italy, which was absolutely devastating.
Yeah, absolutely. I think we're going to be hearing more and more about that, because I think President Trump is going to continue to keep that issue front and center. That issue being, when do you open up the economy? How do you open up the economy so that the economic impact is minimized to a certain degree? Let's bring in Max Neeson, Bloomberg Opinion healthcare columnist. Lisa, he always has wonderful thoughts on this. So, Max, just a compelling press conference by Andrew Cuomo. What was your key takeaway there?
My key takeaway was that he sort of drilled down on what are going to be the couple of crucial issues going forward. First, how do we respond to the immediate crisis? The need to be more aggressive and to start now in New York, which is obviously being the worst hit by the virus, both in terms of, keeping people out of the hospitals, and then making sure they can actually treat people. You saw that sort of impassioned plea to start getting ventilators for now. And then the second one, that big overarching question of when exactly it might be time to start the economy up again, start to reduce some of these restrictions. And Cuomo making it really clear that, the priority, at least right now, needs to be the public health side. We need to see evidence that the issues we're taking now are actually starting to have an effect. That we're still seeing the wave, continuing to rise in New York, and that means that it's likely to happen. That's still to happen in other places around the country too, that are earlier in the stage of the outbreak. So, we need to make a data-based decision and to be patient. The only thing that's going to result from acting too soon is more of a tragedy from a public health sense, and potentially just as bad of an economic impact as you might see from holding businesses closed.
I want to parse through this because it's become really the debate of the moment. The economic effects, clearly devastating. We got manufacturing and services data out this morning showing some of the biggest drops in history when it comes to activity in the United States, and that follows what we saw in Europe. Certainly, we're seeing this all around the world, and the effects, the social effects, as well as the health effects just of people losing their jobs and having serious financial issues is a significant concern. Can you parse through what some of the data is showing on the health side? If there is no effort to contain the virus, what would the outcome be? What is sort of the big fear there?
The outbreak would be unbelievably tragic. It's what we're seeing in Italy, but in many places around the country. If you just let it run wild, if you don't take these really aggressive steps, then you will overwhelm the hospitals. You'll force them to decide who gets the ventilator and who they may have to leave to have a much worse outcome, potentially die. We're on that trajectory in New York, and the fact that we're seeing it elsewhere at this moment only has to do with the fact that they're slightly either earlier in the stage or they haven't done as much testing or they're not as dense. But unless they, take preemptive action, they're going to potentially get to where we are in New York. And then the other key thing to remember is that, the overall case fatality rate If you do a really good job, if you have a good response, like you're seeing in for example, South Korea, it can be less than 1%. But and if you look at the center of the outbreak in Wuhan, in China, where the healthcare system rapidly got overwhelmed, where there were the most cases, the rate was so much higher. And the reason to kind of take this big economic hit is to prevent a serious tragedy of that magnitude. And if you don't act with the appropriate aggression and gravity, you risk that happening in more places in the United States.
So, Max, as Lisa and I were just discussing, Andrew Cuomo, governor of New York, we're talking about the federal government needing to step in here either or by implementing the Federal Defense Production Act, or at the very least releasing the stockpile of about 20,000 ventilators that are in the federal stockpile to New York. Do you think those are reasonable requests on the part of the governor?
I absolutely do. I mean, the evidence is right there in the case count. It's right there in the projections of how soon some New York hospitals could go overwhelmed. And the fact that they're building beds in the Javits Center. And it's not just that those are reasonable requests. It's reasonable to ask that they move with some urgency, because ventilators and beds and staff don't get created or assigned overnight. It takes time and effort. And the later you start, the less of the less is going to be available as cases continue to pour in. There's nothing to wait for. It's if you don't do it now, you risk having. And then the sooner you get the outbreak under control here, the sooner you have those greater resources to move to other places, because it's going to happen at different speeds around the country, either in terms of the gravity of the outbreak or the extent to which it's recognized, and the point where it reaches the status where you do start to have those shortages of equipment, of ventilators, and of staff. So both reasonable and urgency is also kind of really needs to happen.
We're speaking with Max Neeson of Bloomberg Opinion following that press conference by Governor Andrew Cuomo of New York, talking about the dire need for ventilators as the crest, as sort of the peak of this particular wave of virus in New York is expected to come sooner and faster and perhaps worse than people had expected, coming in 2 weeks. And Max, I want to shift the conversation a little bit toward remedies aside from just providing more hospital beds and ventilators. We have heard about some medical remedies. Andrew Cuomo talked about it. President Trump talked about it. What has been shown to be effective in treating this, and sort of how far along are they in that?
I mean, the unfortunate answer is that nothing has been proven to be effective in terms of, the subject of a rigorous and sizable clinical trial. There's early evidence of, the drug that President Trump likes to mention a lot. It's called hydroxychloroquine. But again, small trial in France, evidence that a few other countries have been willing to add it to their treatment regimens. But nothing that kind of would give you the confidence you need to say this is something that's going to be broadly effective. So we still need to study it. There's enough there to warrant further study and to potentially try this out in some of the direst cases. But we're still a good ways away from knowing whether existing treatments that are currently available. It's great if that works, because it's a fairly well understood drug. It's generic. It's widely available. But again, kind of hyping it up too much is dangerous, because we already see stockpiling behavior, and this drug is also with lupus for rheumatoid arthritis, and a report that a man in Arizona took a version of a similar drug intended for aquariums and died, unfortunately. So it's still going to be some time before we have identified treatments that are going to be truly confirmed to be safe and effective. But trying things on the ground right now, as it should be in dire cases.
Max Neeson, thanks so much for joining us. We really appreciate your perspective. Max Neeson is a Bloomberg Opinion healthcare columnist. We always rely on him for his smart thoughts on all things healthcare. Right now, let's get world and national headlines with Nathan Hager of Bloomberg News. Nathan.
All right, Paul, thank you. The world's second most populous country is going to a 3-week lockdown starting tonight due to the coronavirus. India's Prime Minister Narendra Modi made that announcement today an address to his nation saying there is an economic price to pay, but if India can't manage a lockdown for 21 days, it'll be set back by 21 years. President Trump has strongly resisted a similar move for the U.S. He's arguing some parts of the country can reopen for business while others keep fighting the outbreak. New York Governor Andrew Cuomo says COVID-19 is accelerating.
The inescapable conclusion is that the rate of infection is going up. It is spiking. The apex is higher than we thought, and the apex is sooner than we thought.
Governor Cuomo says that apex will be 140,000 hospital beds, up from 110,000. He says New York State has procured 7,000 ventilators, but needs 30,000. In response to President Trump's message that the U.S. can do two things at once, Cuomo is warning against sacrificing public health for the economy. Back in Washington, lawmakers are sounding more confident they can get a roughly $2 trillion stimulus bill done today. Bloomberg's Irv Chapman reports from Washington.
Majority Leader Mitch McConnell opened the Senate session with what may be his final critique of Democratic delays.
Today, the Senate has a chance to get back on track. Today, we can make all of the Washington drama fade away. I believe we're on the 5-yard line.
Speaker Nancy Pelosi said she would put the Senate bill on fast track to approval if there are no final snags, after Republicans agreed to an oversight panel to review the terms for subsidies of big business. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg Poll.
And I think that
Thank you so much, Nathan. We appreciate that. Lisa, looking at the market right here, still very strong, holding on to those gains, really looking to Washington, D.C. to see some type of fiscal stimulus coming out, ideally today, but we'll have to see how that plays out. But clearly the market's a big bounce back day today after the volatility of the past couple days.
Honestly, I mean, this is also volatile, right? There's Sarah Ponzak of Bloomberg News, who covers Bloomberg for markets of all types for us, was taking a look at just the stomach-churning moves in the S&P 500 since peaking. Just to give you some numbers, since peaking on February 19th, the S&P has fallen 34% in 23 trading days, right? Yep. But it's not just that. I mean, the swings have been unbelievable. Limit up, limit down. I think it was 10 out of the past 11 days we've seen limit up or limit down, either futures or stocks, the cash stocks. Just unprecedented to see this kind of volatility as people try to get their hands around the potential financial damage as well as the fiscal response, which still is sort of in the wings, but we don't really know.
Right.
It does seem like it is getting closer, though.
All right, well, let's talk to a professional about what to do with these markets. Matt Maley, Chief Market Strategist at Miller Tabak, joins us here. Matt, thanks so much for joining us. Wow. Okay, so we've got the green on the screen today, but just help us put into perspective what we're seeing in the markets really over the last couple of weeks, but certainly over the last several days.
Well, it's funny because back when the thing first hit, we were saying that people should raise some. The market was priced for perfection, and people should raise some cash because if we did get a severe downturn, you'd be able to be able to put that cash to work. And now we're kind of seeing the opposite situation. We're going to be a little bit more comfortable. Not saying that the bottom is in, and today's market's doing better, but you can't. I think it's impossible to grab pick the exact bottom. So if you're dipping your toe back in here and buying more on a very gradual scale down basis, a year from now or 2 years from now, you're going to look quite good because once it does bounce, it's going to be impossible to chase it. So you do have to take advantage of it when it's down.
Matt, I want to follow up on that. The concept of once it bounces, you won't be able to chase it. That sort of implies that we are going to see some massive recovery, and that doesn't seem to be the consensus right now among at least economists who I speak to. Can you talk about the market recovery and how it might look versus some of the economic estimates that we're hearing that are not so optimistic?
Well, we've always got to understand that the stock market moves, especially on the way back up. So in this case, it was a very mild delay. Usually, there's a big the stock market rolls over 6 months in front of the economy. Now, because of this kind of a black swan event, it only happened shortly after it became evident that it was going to rear its ugly head. But the thing is, when the market it bounces a lot earlier. I mean, in and the simple reason is that it gets sells off very much more quickly than the economy slows down. So it prices in some of the worst case scenarios much more quickly. Now, again, that's not to say that this market can't go down further. But the important thing is for investors to do is to separate what's going on in the stock market to what's going on in the economy, because there's always that lag. And one of the key reasons why people, I don't really want to have a lot of confidence to buy any stocks until things feel better. But you know something? History shows us that when things really feel better, the market's already seen a big bounce and a big move up. So to gradually buy stocks over the next few months, and I'm not just saying the next week or two, over the next few months is going to be a good way to take advantage of this severe downturn.
So, Matt, as you think about it, the volatility that we've seen in the market, we continue to see in the market some, sectors really at historically low valuations. I'm thinking about, some of the cruise lines and some of the leisure lines that got hit the most and earliest. How would you suggest people do get back into the market to the extent they want to kind of dip their toes or dollar cost average or however you want to swing it?
Right. I mean, one of the things, of course, we know that these cruise lines or the airlines, et cetera, when they turn around, boy, it's going to be a grand slam home run, whoever can pick that bottom. But like I said, it's almost impossible to do that. The thing is, with so many high-quality names and, companies with great balance sheets, great managements, and things like that, you're still going to be able to hit a two-run homer. So why go for the grand slam when you can hit a two-run homer? Usually, you only get an opportunity where, I can get a beaten down stock or a beaten down group because it's separate from what's going on in the rest of the world. Therefore, the best I can do in the really quality names is a single, but boy, I can hit a grand slam with this other one. Now, if you can hit a home run or a two-run or double, why not go with the high quality names? And that's why, there's much less risk, but still a lot of reward in those high quality names.
We're speaking with Matt Maley, Chief Market Strategist at Miller Tabak. And Matt, your argument sounds compelling. It makes sense based on the buy the dip kind of mentality that we've seen over the past decade. There is a question, though, that the disruption here is fundamentally changing the economic outlook and fundamentally changing the balance sheets of a lot of companies. And it doesn't seem like all of them will be rescued. How do you sort of get confidence that this time will be like the others and that buy the dip will work at a time of such incredible uncertainty just about, how quickly this will recover, whether we might be heading into a depression?
Well, I think one of the things that's going to be, first of all, again, I just want to say that when the market started heading down, I was saying, sell the bounces. So, I was early calling for investors to be careful, raise some cash, and really when the market was still down 20 or 25%, I was saying the same thing: raise cash on bounces. However, the thing is, and you're absolutely right. Lisa, one of the things that people are saying is, geez, I can go back in, and it's much more than a dip this time. It's a crash, basically. But what do? Do I just buy the stock market and buy everything like I've done? I did in 2018. I did in 2016. That works like a charm. Now you have to be much, much more careful. It's now becoming a stock picker's market. People have been saying that was going to happen for a while. It's happening now. I believe that to a certain degree that passive investing is dying, and so therefore investors need to be thinking about specific companies, not just specific industries, but specific countries within the best industries. And you talk to your investment advisor. Use the mutual funds that have a tradition of having really good stock pickers. There's not a huge amount of those, but there are several that are very, very good. And that's why I think people can dip their toes back in and dollar cost average down, rather than jump back in and say, geez, I'm just going to buy the S&P or some sort of ETF with my eyes closed.
So, Matt, what are you looking at right now? What are the names today that you're looking at, or the sectors today that you're looking at?
Well, one of the things it's funny is this whole technology thing, and I've been a little surprised by this, but I shouldn't have been. Now that
this whole technology thing, this whole iPhone, this whole smartphone thing, it's just amazing.
Well, I mean. The funny thing, but in years past, when in the 1980s, 1990s, even especially after the tech bubble, in the next decade, in 2000s, the aughts, I guess as they call them, the people would say, oh, geez, when you go back in, you don't want to go right back into the tech area because that's the more risky. Yeah, more reward, but it's a very, very risky area. This time, and therefore they tend to do better on the way up, and then they get clobbered on the way down. But now technology has become such a backbone of our economy. It's not the risky part of it. There's certainly parts of technology that are more risky than others, but you got some great companies out there that are the backbone of the U.S. industry. It's not General Motors anymore. It's not General Electric anymore. It's the Apples and the Microsofts of the world that are the backbone of our and we've seen that in the way the market's gone down. Instead of underperforming, the Nasdaq, which is obviously heavily weighted in technology shares, has gone down the same amount as the S&P. It didn't underperform on the way down, even though it did outperform nicely on the way up. And that's encouraging to me that some of the names you'd wanted to avoid in past sell-offs, at least early on. These technology names, especially the high-quality ones, are the ones you do want to be buying. And they have outperformed over the last 6 trading days, and so I think that tells you something right there.
Matt Maley, thank you so much for taking the time. Matt Maley, Chief Market Strategist at Miller Tabak and Company, joining us on the phone. And those iPhones, I think that the smartphone industry is onto something, Paul. I think people are going to still use their smartphones after this coronavirus disruption.
They're going to catch on to be a thing.
I think so. I think that might be a place of use. Actually, interesting to think about how much actually cloud computing and all tech is going to get a boost from this. Interesting times. Right now, we're coming up. We've got Bloomberg Balance of Power. I'm Lisa Abramowitz along with Paul Sweeney, and this is Bloomberg Markets.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local listings. Interconnect here.
Let's start with the national security implications of this.
Balance of Power with David Weston.
What could the United States do to help?
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening.
With the Bloomberg Small Business Report, I'm John Tucker, brought to you by Dell Small Business. A virus rescue package from Congress would include about $350 billion in loans for small businesses that would convert into grants if they retain most of their workforce. Those companies can apply for low-interest disaster loans from the Small Business Administration. But there's a catch. It can take as long as 21 days to process an application. Once approved, the SBA says it might take another week to go through. All states were approved for coronavirus disaster loans, but the SBA site warns we are experiencing high volumes of traffic and the site might be slow. Every day counts when half of small businesses have a cash buffer of less than a month, according to a J.P. Morgan Chase Institute study. Small businesses employ almost half of the private workforce in the United States, and the layoffs are already underway. And that's the Bloomberg Small Business Report.
Vatsal Shah is Senior Project Engineer at Mott MacDonald.
Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night tube and night overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City Line is now closed. We will keep you updated as our services change. Search TfL.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Which.co.uk. Our tests find you the best.
Get a front row seat with a Sky Store movie tonight.
Let's get something straight. It's my mission to protect her.
Stay in for an action-packed night with Terminator Dark Fate.
If you put her in danger, I will mess you up.
Watch the latest movie straight from the cinema.
I'm going to help you protect the girl.
Terminator Dark Fate. Available now in Sky Store.
We don't win this one, it's all over.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Composite index, that is a gain of 6.7%. We've got the 10-year down 23 seconds, I should say. The yield right now, 0.85%. Gold up 4.3%, surging $67 the ounce at $16.21. And West Texas Intermediate crude now up by 1%, up 23 cents a barrel at $23.56. So stocks rallying as investors rediscover some appetite for risk, with Congress looking close to an unprecedented spending bill to prop up the slumping economy. Stay with Bloomberg for the very latest developments coming out of Washington. Well, what about signs of a bottom for the U.S. stock market? Julian Emanuel is Chief Equity and Derivative Strategist at BTIG.
What we saw yesterday, if you looked at the gyrations between, in the last 24 hours, essentially 24% high to low to high to low of the total value of the S&P went back and forth. And that to us, particularly with the VIX going lower, even though you made a new low in SPX, tells you that the sellers are not necessarily finished, but quite exhausted.
Indeed, the S&P 500 index rebounding from the lowest level since 2016, poised to notch a third straight Tuesday turnaround after beginning the week with a rout. Again, we have got the S&P 500 index surging 173 points. That is a gain of 7.8%. History in the making here, with the Dow rallying 8.8%, up 1,631 points. NASDAQ up by 6.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Balance of Power.
We have the strongest economy by far in the world.
We need an economy that works for everybody.
I am the one who has the broadest coalition.
Where the world of politics meets the world of business.
They've got the money they need to run a very competitive race.
These lawyers brought the case, and in my view, they should be sanctioned.
We want certainty in the markets. We want certainty in our trading relationships.
The administration is trying to create a new divided world.
Balance of Power with David Weston on Bloomberg Radio.
The nation and its markets wait for congressional action to stem the losses. Jobs are at the center of economic concerns, with some saying unemployment could rise as high as 30%. And economists around the world take their best guesses about just how deep a downturn we'll see. From the Bloomberg Interactive Broker Studio, welcome to the second hour of Balance of Power. We all know it's going to be bad, but we all are trying to get some sense of just how bad. And for that, we turn now to our economists. For his views, we welcome now Calvin Schnur. He is Senior Vice President for Research and Economic Analysis at NAREIT. That is the National Association of Real Estate Investment Trusts. So thank you so much, Calvin, for joining us. And I'll warn you right now, we are waiting for a news conference we're told will be happening shortly from Governor Charlie Baker of Massachusetts to announce some closeout. So we'll have to go to that when it happens. But in the meantime, I want to get everything out of you we can. Give us your sense about how bad it could get.
Well, we're still seeing news unfolding on the health crisis, and we're not going to have any certainty about the economy or financial markets until we see just how the health is going to unfold. That said, what we're seeing right now with the financial markets is really pricing in a pretty severe scenario, and the sectors that are most exposed to this could well face those issues. I want to draw one distinction between now and 2008. 2008, we're seeing a lot of comparisons, and then you had an insolvency crisis as well as illiquidity. Homeowners were underwater. They had no equity. Banks were undercapitalized. Many were bankrupt. That's a different challenge from right now. This is a real immediate cash crunch, but the capital positions are stronger. We are not faced with insolvency the way we did before, which gives us some hope of dealing with this in a better way.
Give us a sense specifically from the real estate point of view. We had some numbers out actually just this morning, which were not as bad as people thought they might be.
Well, the numbers that are coming out this morning are still from before we saw the worst of it. What we're seeing is home sales. Actually, everything was quite strong coming into this crisis, and that's one other reason why we'll have an easier time dealing with the challenge. I'm not downplaying the challenge. This is a major challenge, but the REITs, the real estate and investment trust industry, the REITs came into this crisis having the strongest balance sheet position they've had in 25 years. They had record earnings last year and have high occupancy rates. That means that they're able to handle this better than they would have been in the past. We're seeing home sales were very strong, but they're certainly going to plunge in the next month or two because buyers don't want to be out meeting with realtors, meeting with sellers. So we're going to see some pause in the housing market. But overall, the fundamentals for that, in terms of not having a supply overhang over construction that we did in 2008, are more favorable than in the previous round.
Do occupancy rates tell us much right now, whether you're on the commercial side or the home side? If people have lost their jobs, they may not be able to pay their mortgages. If companies basically are really, really hurting, they may not be able to pay the rent.
Well, it's certainly going to push it's going to take a hit to occupancy rates. But starting from a position where you had record high occupancy rates and no excess supply is a better position than if we had mediocre occupancy rates and some supply to digest. So we're in a better position to deal with people who are now facing the challenge of renewing the release.
We all are waiting anxiously for something to come out of Capitol Hill. We're told by leadership it should be soon, not clear how soon it will be. What do you need to see coming out of Congress right now?
What we need to see is something that is addressing the immediate cash needs of households and businesses. Again, I mentioned that this is a liquidity crisis, and actually the big difference from 2008 was 2008 unfolded over a period of about 18 months, where we all saw it coming and it got worse. It was almost drip by drip compared to today, where over a period of 10 days or so, all of a sudden businesses are faced with some businesses total shutoff of cash. So to the extent that the bill coming out of Congress addresses these immediate cash shortfalls, helps the businesses, the small businesses and large, as well as households, that could really help us deal with the situation.
How fast do we have to get the cash to people?
As soon as possible.
How quickly, as a practical matter, can you get the cash to people?
I'm not sure how quickly it's going to be. You're obviously talking not days, it will probably be weeks. If it's months, we would have real problem. This is something that has to happen in March and April.
So of all the things that you've heard coming out of Capitol Hill, what is the one that encourages you the most? What's the thing that discourages you the most? It makes you most worried?
What encourages me the most is actually saying getting the cash to the businesses and supporting the businesses. Households are a real concern. I'm glad to see that the households are getting support, because people who've lost a job or losing hours are going to be struggling. But there are many households who are not losing their jobs, but they're not shopping. So there's stores that have lost all of their income and need to make their lease payment, need to make their interest payment. They're going to need the immediate cash relief. So I'm glad to see that the approach is balanced between households as well as the businesses.
So what does that lead you to in the question of how you balance, on the one hand, doing what the public health authorities say, we should really just shut the thing down, and on the other hand, the economists say we have to keep some economy going. We heard this from Larry Kudlow just today. We heard it from the president over the weekend. We cannot keep the economy shut down indefinitely.
Well, we're faced with a pair of bad choices. Do we solve the health problem and impose further cash constraints on the economy, or do we ease up the health problem and hope that a worsening health crisis doesn't cause an even bigger problem down the road? I'm actually concerned that if they don't address the health problem right away, the problem down the road could be bigger.
At the same time, it varies from region to region, place to place. I mean, here in New York, certainly we have a huge problem. California does, the state of Washington does. Other parts of the country that certainly are at risk, but they haven't seen it yet. They haven't seen the same level of incidence.
I'm not a public health expert, so I can't really comment on those. I would just say, as a data scientist, I would say they haven't seen it yet, but they haven't been testing. We don't know how much it's spread in these other areas and how quickly it's spreading. That's one reason for having caution on the public health front before we worry about these other issues.
We've seen some pretty alarming numbers come out of some economists at some of the big banks about what we could see, for example, in terms of GDP in the second quarter. To some extent, we're all guessing, but some of us are more informed in our guesses than others. I suspect you're one of those people. What do you think the range is? What are you looking at?
I'm surprised at some of the more negative estimates that we've seen coming out. We're clearly going to see a negative impact. And if you look at the total travel and entertainment area, you're talking about 10% of the economy. And so if that's cut in half, you could see it taking 5 percentage points. It's easy to see something that is in the range of 5% negative growth. More than that is also possible, but some of these really negative numbers would imply that all the service sectors that could be working from home aren't working from home. And I would be surprised to see that type of downside. But then again, we've been surprised by a lot of things, so I'm just keeping my fingers crossed.
And as you suggest, it's not limited to entertainment by any means. I mean, you got retail stores here around Manhattan, for example, all shut down. So there's no dollars coming into their tills as a practical matter. So it could expand out well beyond just entertainment.
Well, but there's an important difference between activity that does not happen or activities that's done in a different way. I expect the delivery trucks for Amazon are full and they're working extra hours right now. So some economic activity is going to take place through other channels. Retail through the online deliveries. I was talking earlier about service sectors. I'm working from home. A lot of people are working from home. The economy doesn't shut down completely right now. It's working in other ways.
Is it too soon to start thinking about whether we ever go back all the way to the way we were? I mean, particularly for you, an expert really in real estate economics, already retail, for example, bricks and mortar was under some stress. Is this going to expedite that? Is it possible, as you suggest, we'll just buy more and more online and less from our local store?
Well, first I'd have to define how I would interpret saying the retail sector was under stress. The retail sector actually was still having growing sales. People think that bricks and mortar retail was losing sales. No, they were losing their share of sales. But there were some things like furniture you don't buy online, shoes. Some people do, some people don't. There is still a strong need for bricks and mortar retail. Certainly, what we're seeing now is going to accelerate the transition to online commerce. But even through all of the issues that have come along, bricks and mortar retail is a part of every retailer's strategy.
What will define how we rebound? I mean, how quickly and how sharp it is?
What will define it? I'm not sure what you mean.
Well, if you were looking at a dashboard and say these are the factors that say that will make it come back faster or slower, or it'll make come back in a more dramatic fashion, what would be on the dashboard?
Okay, the first thing is just the ability for people to move and interact. Public health has to come first. But once that does happen, I'd like to see what happens with the job market. I'll look at initial jobless claims every Thursday morning until this crisis is over. We're expecting a real blowout number in 2 days, and we'll probably see very large numbers. I'll expect unprecedented numbers. As the crisis moves on and we see some stabilization, I'd like to see those numbers taper off. The next thing I look at is retail sales. How much are people going out and shopping? How much people in the stores? Keep in mind that the people who've held on to their jobs and are not spending might see some money piling up in their bank accounts. We're going to have a stimulus once the health crisis eases, because the stimulus comes from spending the money that they've not spent right now.
Yeah, we can't wait for that. That would be lovely to see. In the meantime, I'm watching over here on a screen, and the governor of Massachusetts, Charlie Baker, is making his way to the podium now. He's going to be having a news conference. We're going to that. Thank you so very much to Nareit's Calvin Schnoor. And now we go live to the news conference of Governor Charlie Baker of Massachusetts.
Reminding folks that our emergency order regarding non-essential businesses goes into effect basically now. The Department of Public Health has also issued a stay-at-home advisory, which we talked about yesterday. This outlines the self-isolation and social distancing protocols that everyone needs to pay very close attention to. We know that these measures that we've outlined yesterday are going to be very difficult and inconvenient for many. But our goal right now is to slow the spread of the virus by limiting opportunities for person-to-person contact. Taking action now to limit the spread of the virus will give our public health officials, our healthcare community, and others time and opportunity to meet the challenge ahead of us. The goal, of course, is to flatten the curve so that the number of cases doesn't overwhelm our healthcare system all at once. There's no question that these are challenging and unprecedented times, but I know the people of this great Commonwealth will meet this challenge, as they always have, head on. As we've said before, ramping up testing capabilities is a big part of pushing back against this threat. The Command Center has been working hard to increase the Commonwealth's ability to do that with both the state public health lab and with many other private labs and healthcare labs. We're continuing to make progress on increasing the number of tests completed as well as our testing capacity. There have now been almost 9,000 tests completed in Massachusetts, which is up from around 6,000 on Sunday. In addition to the State Public Health Lab and Quest Diagnostics and LabCorp, there are now 10 additional labs that are up and running. Beth Israel Deaconess, BioReference, Children's Hospital Boston, Mayo Clinic, Partners Healthcare, Tufts Medical Center, ARUP, Viacor, and are now among the labs submitting test results to DPH. This is big progress from where we were even a week ago. I also want to remind folks that the number of tests we do in Massachusetts goes up. We will expect the number of cases, the number of positive tests to go up as well. And the command center will continue to expand testing capacity across the state. As a reminder, if you have questions about tests for yourself or your family, if you are showing signs and symptoms associated with something like the flu, you should stay home and begin first by contacting your medical provider. Remember, as we've said many times, telehealth services, phone calls, video chats with a trusted provider are a defined benefit here in the Commonwealth of Mass. We need to keep people that don't need to be in our hospitals and medical facilities out so that we can allow our providers to focus on the people who need the help the most. I want to share a few other quick updates from the command center. As of this morning, the Department of Public Health has made 89 deliveries of strategic national stockpile assets to healthcare facilities across the Commonwealth. DPH has received several shipments from the Strategic National Stockpile, and over 750,000 masks, face shields, gowns, and pairs of gloves have been delivered to DPH and are being distributed. MEMA began distributing personal protective equipment on Monday to at least 15 locations, including fire, police, and first responders. In response to a letter from Secretary Mary Lou Sutters last Friday, the Massachusetts dental community donated masks, hand sanitizers, and gloves, and we are very grateful that so many people are helping out in this critical effort. Similar outreach for PPE donations has gone out to the construction industry and to vocational school communities. These folks likely have more gear that we can repurpose to help our frontline medical workers. Finally, as we announced yesterday, the Department of Public Health advisory has been posted on mass.gov regarding stay-at-home practices. The advisory offers clear guidance to our residents on ways to reduce the spread of COVID-19 and keep their families and communities healthy. The DPH advisory reflects yesterday's announcement by strongly advising residents who are 70 years and older and those with underlying health conditions to stay at home, with the exception of essential trips for food, medicine, and focused time for exercise and fresh air. Advising all residents to stay home as much as they can and avoid unnecessary activities for the next few weeks. Urging residents to practice social distancing and safe hygiene practices throughout their daily activities. Staying at home means only leaving home to address essential needs, like going to the grocery store or the pharmacy, taking a walk for fresh air, or something similar. Everyone is encouraged to call or video chat instead of visiting friends and family. This, of course, is not easy. It's not what we're used to doing with our family and our friends, but it's hugely important, and it is one very significant way everyone can participate in stopping the spread of COVID-19, and especially in keeping loved ones safe. This order is effective as of noon Monday. More details are obviously available at mass.gov/COVID-19. Throughout the outbreak, we've constantly reminded our residents that we all need to get our information, your information, from trusted sources. Today, we're making that easier with a new program. Today, we're announcing a new tool, Alerts Mass, Alerts actually MA, in our efforts to inform the public about COVID-19, which will enable you to get up-to-date alerts about coronavirus sent right to your phone. This can be used to share news, prevention information, and help us connect residents to information they may be seeking. Residents can text COVID-MA, all one word, to 888-777 to sign up for updates. These alerts will include important information like the latest news and updates from our administration in the command center, public health tips on social and physical distancing, personal hygiene, and other ways to stay healthy, and important alerts about state services. We're not looking to bombard folks and add to the information overload many already feel. Most days we will only push out 1 or 2 notifications, but this is a great way to stay in touch with the Commonwealth's government and to hear the latest announcement from trusted sources. It may also provide some relief from staying glued to your television all day to hear the latest headlines. I want to thank our team at the Executive Office of Technology Services and Security for working with Everbridge, a Mass-based company located in Burlington, to bring this new capability to the Commonwealth and to the people of Massachusetts. We've been working hard, as many of you know, to also deal with red tape where we can, to give our agencies and our cities and towns more flexibility as they respond to the virus. As a few examples, we've made it easier for nurses licensed in other states to work in Massachusetts if our hospitals need to call in more frontline healthcare workers. We also issued a series of new emergency orders to make it easier for medical professionals to work at neighboring hospitals. That way, if they need more people at a certain hospital like Mass General, for example, we can call over staff from other hospitals to support them. We've expanded telehealth services, as I mentioned before, so that people can call or video conference with providers instead of visiting a hospital or a provider organization. And we've issued relaxed administrative requirements so more physicians' assistants can work on supporting treatment for COVID-19 patients instead of their other assignments, such as elective surgeries. A lot's been done to support our healthcare system and other functions of government. And today we're pleased to introduce a new piece of legislation that cuts red tape for our cities and towns. As former local officials, Lieutenant Governor Polito and I understand the challenges that cities and towns deal with every day. As we all battle COVID-19, our municipalities need new tools and resources to ensure the continuity of local government and to support the needs of their residents. Our local leaders obviously are focused on ensuring the health and safety of their residents, and our goal with this new bill we're filing today is to cut down on some of the bureaucratic processes they would typically need to go through or could go through if they could actually meet physically. The Lieutenant Governor will provide some details on this bill in a minute. For the last 2 days, we've all been following closely the developments in Washington. The debate around the economic aid package in the Senate, well, frankly, it's been appalling, but I can't say I'm surprised. I've watched and seen governors and mayors and other elected officials completely shift their focus to the task at hand without the slightest partisan bend. So I know it's possible, if they choose to, for D.C. to do the same. I think we all hope and try to be confident that Congress will get the job done and soon, because this kind of partisan behavior is simply not an option now. It may take a little longer than it should. In fact, it already has, for Washington to come around, but I'm hopeful and confident that they will, and that they will soon. As I said, governors, mayors, and other elected officials at the state and local level are stepping up on this. We've been very pleased that we've had a chance to talk to and engage with many of them over the course of the past several weeks. I myself have probably talked either directly or on calls with more than 40 of our nation's governors over the past 14 days, and they are all stepping up for their states and doing everything they possibly can to help their people stay safe throughout this crisis. And as we all know, these are very uncertain and challenging times, and the situation's changing and evolving constantly. We remain enormously thankful that the residents of the Commonwealth of Massachusetts have brought determination, guile, creativity, and guts to this process. And we appreciate enormously their commitment to staying home, distancing themselves from what would be otherwise traditional person-to-person contact, engaging in the kind of personal hygiene that's critical to keep them and their family members and friends safe, and doing all that they can to stop the spread. Residents can stay up to date on the latest information from trusted sources by visiting mass.gov/COVID-19, calling 211 with questions, which at this point has answered and responded to thousands and thousands of inquiries. Sign up for this new text update by texting COVID-MA, one word, to 888-777 and get your news from reliable sources wherever they may be. I now want to turn the podium over to Lieutenant Governor Polito, who can talk a little bit more about this municipal legislation.
Okay, we have been listening to Massachusetts Governor Charlie Baker in a live news conference from Massachusetts, and the main purpose of which I think was to say, as of noon today, that is to say now, all non-essential Massachusetts businesses are closed for all in-person service. He also said that they're trying to flatten the curve, just that we've been talking across the country about. They have increasing tests. At the same time, they've increased the number of labs that can do the tests, but they expect the number of cases will go up as they do increase the tests. He also proposed legislation to cut down on some of the bureaucratic red tape for local government, as local government is often on the front line of fighting these things. And finally, he had some words for Congress, saying that he found appalling the partisan debate going on over stimulus. He was confident sooner or later they get through it, but it's taken far too long already. It bears mentioning that the Governor Charlie Baker, actually has been a health official both in the state government and also in the private sector, so he knows what he's talking about. And now it is time for a business flash. For that, we go to Charlie Pellet.
Hi, thank you very much, David Weston. Stocks higher across the board right now, at or near their best level of the day as we await word from Washington. The Dow up 1,729 points. That is a gain right now of 9.3%. S&P 500 index up 184, up 8.3%. NASDAQ up 487. That's a gain there of 7.1%. 10-year is down 30 seconds with a yield of 0.88%. Investors rediscovering some appetite for risk with Congress looking close to an unprecedented spending bill to prop up the slumping economy. The dollar halting a 10-day rally. Stay with Bloomberg for the very latest developments out of Washington. So again, recapping here, stocks are surging. Gold up 4.4% at $16.21 the ounce. The price of oil, West Texas Intermediate crude up 2% now, $23.84 a barrel. A barrel of Brent crude. Brent, of course, the global benchmark up 2%, $27.59 a barrel. Again, recapping, the Dow, the S&P, and NASDAQ all surging today, with the S&P up by 8.3%. This Bloomberg Business Flash brought to you by New Jersey Institute of Technology, transforming computer professionals into data scientists to meet demand in this fast-growing field. More at njit.edu/Jersey City. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. From the Interactive Brokers Studio, this is Balance of Power on Bloomberg Radio. I'm David Weston. We hear from President Trump and his coronavirus task force just about every day, and there's no doubt that the federal government has a critical role to play in fighting the virus. But it's the state governors and the local public health officials who are on the front lines of the war being fought, as we were just reminded once again by Governor of the Massachusetts, Charlie Baker. Welcome now, Meryl Chertoff. She's Executive Director of Georgetown's Project on State and Local Government Policy. So thank you so much for joining us. Really appreciate it. As I say, we just heard from the governor of Massachusetts, including talking about the local officials and freeing them up. But take us through the federal system and how it applies to a health crisis such as the one we have right now.
Well, thanks very much, David. And this was really a great way to tee up what I have to say here. What you heard Governor Baker doing was something that we talk about as being horizontal federalism. And that is that the state governors, in the absence of federal leadership, are stepping up to the plate and are modeling for each other what the best practices are here. So in a crisis like this, the state governors have a critical role to play. There are emergency declarations in all 50 states right now, and in many cities around the country, including major cities like New York, San Francisco, Los Angeles, and Chicago. This gives and the mayor's very broad powers in order to make orders with respect to the emergency. Some of those orders are things like the shelter-in-place rules that you've seen, closing of non-essential businesses, like Baker announced, and also in certain cities there have been curfews that have been announced. And I think that what's really interesting is to see how these best practices have been tried in one state, and then they're spreading from state to state. And again, that's the inherent power of the governors in emergencies, but also one of the reasons why this is happening and it's so critical it's happening is that the federal government has not been leading in the way that one might expect in a national emergency like this one.
Well, it really bears mentioning that there's a limit to what the federal government can do in terms of shutting down the economy, right? We're hearing President Trump over the weekend, and then we heard Larry Kudlow just this morning, his chief economic advisor, saying, we think we're going to lift some of the restrictions come next week at the end of the month. At the same time, for example, in the state of New York, Governor Cuomo doesn't have to listen to him about that, right?
That's correct. The governor can make his own determinations, but as Governor Cuomo himself pointed out, a determination that he makes, if it's not being done in New Jersey or Connecticut, simply can allow people, for example, shoppers, to shift their buying habits, because right now we're all able to travel from state to state. So there does have to be comprehensive national leadership.
So consistent with your horizontal federalism, what should the federal government be doing, or for that matter, what should they not be doing right now, compared to what they are doing?
So the most important thing that the federal government can do right now, and this is something that the president has announced, is inject massive amounts of aid to allow the states to execute on their emergency programming. They have to lift red tape, and they in my opinion, they have to utilize the Defense Mobilization Act to allow production in factories of the personal protective equipment that's so critically needed in cities and states. Right now, we have a situation where the governors and the cities are actually bidding against the federal government for this equipment. So there really needs to be a massive shift in that, and that's one of the places where the federal government is indispensable, because we've got a situation where there are limited supplies, and then there's bidding going on against each other, and that's where there has to be comprehensive federal leadership.
Meryl, thank you so much for joining us. Really appreciate this. Meryl Chertoff of Georgetown. Now we want to talk to you about the labor economy. Economists agree that the fate of America's workers is a key factor in how bad a downturn we really face and our path to eventual recovery. Welcome now the point man for federal policy when it comes to jobs. He is Eugene Scalia, Secretary of the Department of Labor. So, Mr. Secretary, thank you so much for joining us. First, we have to ask you the question that may be very difficult to answer. Do we have a sense of how bad it's going to get in terms of unemployment?
Well, we know, David, we know it's going to be a challenging period. It's going to be rough for a period of time. We don't know how bad it will be nationally. We know that for many people, it's going to be difficult. They're either not able to work because they're ill themselves, they've got an ill family member, their employer may have had to shut down because of a state or local order. Or we're obviously seeing a broader downturn in the economy. So it's going to be a rough patch. Having said that, there is a lot being done to address that. And you've already been talking about some of it. There was the law the president signed last week, giving up to 2 weeks paid leave for people who need to get out of the workplace because they're sick or to care for a family member. There was also $1 billion in there to help with the state unemployment insurance system. We at the Department of Labor have been putting out some guidance to the states that operate the unemployment insurance systems, making sure they understand flexibilities they have to make funding available. And then this bill that hopefully will be through the Senate very, very shortly has a large amount of money for unemployment insurance and also loans for employers on the understanding that they will keep their employees on payroll when they get those loans. So it's going to be rough. There's a lot of help on the way. And just one last point, David, we had an extremely strong economy just weeks ago. If people approach the distancing and the isolation that we're doing right now with discipline and go about it carefully and aggressively, I think we've still got an economic base from which we ought to be able to spring back quickly.
So, Mr. Secretary, I think it bears remembering always that we have an enemy here, a virus, and the virus gets a vote in exactly what happens. It's not all within our control, unfortunately. But what is within our control? Let's talk specifically about unemployment insurance. That's good if you have a regular job with a regular employer. What does that do for people who are part-time? What does that do for people on the gig economy? And I guess part of that question is, how big a part of the labor force is that?
Well, let me say that what we want most is for people to have jobs and a connection with an employer. I think that's what people are happiest doing. They have the income, but also the sense of value and contributing that comes from being employed. And even if they're not able to come to the workplace for a while or not actively working for the company, if we can keep that connection with the employer, as Leader McConnell's bill is aimed to do, that's valuable because it's income for them. It's a connection to an employer that hopefully will be back up on its feet in a month or 2 or 3. You're right. We do have part of the workforce that is not working for a company. They're self-employed, independent contractors, the so-called gig economy. David, you see different estimates of that part of the economy. It's interesting. It's a part of the economy that we experience a lot. We take an Uber, we order Uber Eats, or use some other platform services. The number of employees there may not be much, or workers there may be not much more than 4 or 5% of the total workforce. But there are provisions for aid to independent contractors and members of the gig economy in the Senate bill that we're hoping to see acted soon. So it's not technically unemployment insurance, but it's the same concept. There will be federal funds to help those folks too.
Secretary Scalia, is it too early to start thinking about will there be permanent changes to the labor force here?
It's not too early. I think it's important for us to attack this enemy that, as you've described it, very aggressively right now. But we need to be looking down the road and to the point where we're able to stand companies back up. And naturally, it makes sense to think what those will be like. I think, look, telecommuting is something that people are doing more of right now. There will be more people who get comfortable with it. I think companies will probably have a bit more of it once we get back to normal or as close as we can. And there may be other changes in the economy. I don't know what all they will be, but I think that it is important to have the goal of sustaining the very successful businesses that we've had out there during this difficult period so that they're in a good position to resume once we beat the virus.
And it seems that we're watching a balance being played out here of, on the one hand, public health concerns with scientists and doctors really advising us what to do. On the other hand, economic concerns, because as some people say, you don't want to throw the baby out with the bathwater. You don't want to kill the whole economy. How does one make that balance? And as you're trying to advise, because we hear President Trump mentioning maybe we should get back to work. We heard Larry Kudlow earlier today say that. How do you advise the White House on that balance?
Well, look, I think that the input from our public health officials is very important. The president has been very strong in emphasizing the importance of distancing right now, of people during this 15-day period he's identified, absolutely minimizing their contacts with others and the like. And so we do need to pay very close attention to the guidance of health authorities. But there is this task to do of thinking about the health of our economy as well, and the two are linked. A strong economy is good for individual people too. It's again, work provides compensation, but it also I think is good for our mental and emotional well-being too, and of course a strong economy is part of ultimately what supports our national defense. I think we need to think about both of those considerations. I don't think we are in a position to lay down a strict deadline, but we need to be protecting our economy even as we protect our health.
It's a tough job you have, no question about it. Thanks very much to Labor Secretary Eugene Scalia for joining us. Coming up, Majority Leader Mitch McConnell's former Chief of Staff, Rohit Kumar, about the spending package that we're told, at least, is imminent. That's coming up next on Balance of Power, and we are on Bloomberg Radio.
If you promise to cover the latest financial and business...
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Play Thursday, and you could make every month amazing with Set for Life from the National Lottery. Your numbers make amazing happen. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day. Another leg higher in the past couple of minutes or so with the Dow, the S&P, and NASDAQ all surging right now. Stocks are rallying as investors rediscover some appetite for risk, with Congress looking close to an unprecedented spending bill to prop up the slumping economy. The dollar halted a 10-day rally. S&P rebounding from the lowest level since 2016, poised to notch a third straight Tuesday turnaround after starting the week with a rout. Here's where we stand. S&P 500 index now up by 8.8%, up almost 200 points on the S&P, higher by 197 right now at 2434. The Dow at 20,424. It is up 1,825 points. The Dow rallying 9.8%. NASDAQ surging 521 points for NASDAQ. That is a gain of 7.6%. The 10-year down 1 1/32 now with a yield of 0.88%. Gold up 4.4%, 16.22 the ounce. And West Texas Intermediate crude higher by 0.4%, 23.44 a barrel. Recapping, equities surging. S&P up 192 points, up by 8.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash. A balance of power continues. Once again, here's your host, David Weston.
Thanks so much, Charlie Pellet. Live from the Interactive Broker Studio, this is Balance of Power. I'm David Weston. Speaker Pelosi said this morning that we should get a completed spending package today with various estimates of its size ranging from maybe $1.2 trillion up to over $2 trillion. We welcome now an expert on U.S. tax policy and on the workings of Capitol Hill. Rohit Kumar leads PwC's Tax Policy Services. He earlier served as Chief of Staff to Senate Majority Leader Mitch McConnell. So welcome. It's really good to have you with us, Rohit. Thank you for staying with us. I know we've tried to have you on a couple times, but President Trump kept talking. but you're with us now, which is our gain. So give us a sense of this package from your point of view. Is it the right size? Is it targeted at the right parts of the economy?
You know, I think I certainly hope it will be. I think part of the challenge that lawmakers are facing and really everyone is facing is, we have a public health crisis that's unprecedented. And so figuring out how to deal with a new crisis is a challenge. But clearly the centerpiece of what they're focused on Capitol Hill are these lending facilities to both large and small businesses with the purpose of trying to keep people attached to the labor force. We just heard the labor secretary speak, keeping people employed, keeping them attached to their jobs, even if the doors are closed, is really what's chief on the minds of members of Congress, both Republicans and Democrats. And you've seen a lot of back and forth about this $500 billion fund, some call it a slush fund, other call it a lending facility. However, you want to describe it politically, the purpose is to get money out the door, to have the Treasury backing loans so that businesses can maintain payroll, can maintain operations. Because what we don't want to see is a wave of bankruptcies, a wave of layoffs. We want businesses to be in a position that when we emerge from the public health crisis, that they're there to rebound with a strong economy, with a workforce that's in place, that's attached and ready to go.
You want and need to get money out the door, and as soon as possible. We're already late, I think many people would say, as it is. At the same time, you don't want to regret some of the places it goes to. And with the TARP last time, back in 2008, 2009, there was some thought that perhaps it didn't go for the purposes we wanted it to. How do you strike the balance between getting out the door on the one hand, and on the other hand, having some strings, as they say, attached to it, some oversight to make sure it really is applied in the right places?
Yeah, that is the challenge, and I think here the instinct, and I candidly agree with this instinct, is to prioritize speed over precision. Right? There's always a balance to be struck, but given the depth of the economic shock to the system, the shutting down of whole sectors of the economy with everyone sheltering in place and sheltering in place for good reason. I think the emphasis needs to be more on speed. And look, just acknowledge up front, some of these dollars are probably going to go to places that, with perfect hindsight in 2020, we would prefer that they not have gone. But the vast majority of them will go to places to keep businesses operational, to keep people employed. And you just have to acknowledge that there will be some imperfections in the system. And I think the risk, if there's any, is that Congress will attempt to over-engineer the program, responding to political concerns and maybe concerns coming out of 2008. To over-engineer the program to make it either difficult for the money to get out the door or to attach so many strings to the program that a business that's sort of at the edge says, you know what, we can reduce workforce and generate savings that way. That's a path of lesser resistance than going through all these hoops to get access to this lending facility. And I think, if anything, certainly if I were still there, I would be urging everyone to think about speed as the priority over precision. And look, if at the end of the day some of the dollars were misspent or businesses did things with them that they weren't supposed to, there's always the ability to go back and recoup those. But you don't want to hold up the benefit for the 95 or 99% while you're trying to haggle over what the 1% who might not do virtue with it, how you manage that.
What about an oversight body? That's something that Democrats had been asking for, at least some Democrats had been asking for. And I'm now told that it appears that the Republicans may have given in on that. So there'd be a body appointed to sort of have oversight for this. Does that make sense to you? Does that bog things down?
I think that's fine. And certainly we had that with the Troubled Asset Relief Program, or TARP. There was a special inspector general for TARP called SIG-TARP, as it were. And so I wouldn't be surprised to see something like that. And that doesn't give me particular pause in terms of, because that doesn't keep the money from going out the door in the first place. It is oversight. So to the extent that those dollars are sent to places they shouldn't have gone, there's a mechanism to track that and potentially have some recourse. But as long as that is a after the money is out the door feature, it doesn't interfere with getting the economy back on stable footing.
When we started all this, it seems like years ago, I think it was probably 10 days, there was a lot of talk about things like payroll tax relief, things like that. You are a true expert in tax policy. Does that make sense at this point, or is it just too slow, and does it go to the wrong places?
Well, it's not that it's too slow necessarily, because you can provide the relief immediately. It's that it doesn't capture necessarily the full population of individuals that you want to reach, right? Payroll tax holiday applies to people who have payroll tax liability, i.e. they're employed. But the moment you're unemployed, right, payroll tax relief doesn't help you. If you're a senior who's retired from the workforce but living on fixed income, a payroll tax holiday doesn't necessarily help you. And so it's fine for what it is, but it doesn't cover the full population of workers. Where it does help is on the employer side, not less so than the employee side, because for the employer, a payroll tax relief, and that's purported to be included, or that's certainly we've seen in draft proposals, it's not a holiday, but it's sort of an abatement on paying it until the end of 2021. I mean, that reduces the marginal cost of labor, makes it, to the extent that we want to encourage employers and employees to keep in an employer-employee relationship, reducing the cost of an employer, reducing the tax overhead for keeping an employee on board, that's a good thing, because that helps employers keep their payrolls at the levels that they were, keeps employees on the job, even if we've told them to shutter their doors, because we want to, encourage social distancing, as it were.
One person who's an investment advisor wrote me the other day and said they have an idea. Why don't we just give a 20% discount rebate on last year's taxes to people? Does that make any sense as an efficient and effective way of getting money out the door? Either you don't have to pay the taxes you thought you did, or we'll give you a rebate.
Yeah, so, I appreciate the sort of sentiment there. Sort of two things pop to mind. One is, to get a tax rebate, that means you got to apply, you got to go through paperwork, it has to be processed. And if you're a company that has 3 or 4 weeks before you run out of money and have to think about filing for bankruptcy, the IRS paperwork is not sort of top of mind. And the other is that it's not well targeted, because it's not every business in America that is suffering. And so you end up including, a bunch of businesses that maybe don't need relief, and then you end up excluding a bunch of businesses that probably do need relief, but for one reason or another didn't have much liability last year, and so getting 20% of that back doesn't really give them what they need for this year. So the instinct is, I think, appropriate, but there are just better ways to target the relief.
And finally, Rohit, I mean, you're so experienced up on Capitol Hill and with tax policy. Are there any things you don't see being done that occur to you that say, you know what, I think they should be doing that over there as well?
I think that, there are lots of things that in theory they could do, but there's just not, working for the Republican leader, for Senator McConnell, I lived in the world of the doables. So there are lots of things that each party, if they were, running the place by fiat, might want to do. But I think what we're seeing is, here's what's in the world of the politically tolerable. And it's fine to have, brilliant ideas that have no political support. That doesn't get you anywhere. You got to do something that can pass, and what they're working on is what can pass.
Theory meets the real world. Thank you so much. That was terribly helpful. Rohit Kumar of PwC. Coming up on Balance of Power, President Trump is holding a virtual town meeting on Fox, where he's supposed to be. Mike Pence is up there right now, the vice president. We're going to check in for headlines, but more importantly, see what's going on with that spending bill. That's coming up on Bloomberg Radio.
There are times when you have to go.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night tube and night overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City line is now closed. We will keep you updated as our services change. Search TfL.
I love dogs and cats. Short-haired, long-haired. I love you all, don't I, Bianca? But I don't love cat hair all over my carpet, which is why I got a job testing vacuum cleaners in the Witch Test Lab. We rub an exact amount of real pet hair into an exact area of real carpet to see which vacuum cleaners really suck it up. And the vacuums that perform best are the only ones we recommend for your home. Which.co.uk. Our tests find you the best.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is Balance of Power with David Weston on Bloomberg Radio.
Live from the Interactive Broker Studio, this is Balance of Power. I'm David Weston. President Trump is holding a virtual town meeting on Fox as we all sit around and wait for this bill, this massive spending bill that's supposed to be coming out of Capitol Hill. Welcome now our Bloomberg Politics editor, Anna Edgerton, to give us the highlights. So, Anna, let's start with this bill. Any update on that? You're the one who first told me, I believe, that it appears that they're going to have an oversight body for the $500 billion.
Yeah, that's right. House Speaker Nancy Pelosi said that this morning, and we had sources from the Treasury confirm that as well. It looks like that oversight panel for the $500 billion available for loans and loan guarantees is going to consist of 5 members appointed by Congress, as well as an independent inspector general. So structured kind of like the TARP measures after the 2008 crisis.
So what are they doing up there right now? Do you have a sense? Are they still negotiating? And if so, over what?
So Schumer said that they're on the Senate Minority Leader Chuck Schumer said that they're on the 2-yard line. So they were on the 5-yard line last night.
Good. We made 3 yards progress in the last hour. That sounds encouraging.
Pelosi said they're in the red zone. So, to pick your metaphor, we're getting closer. But once they finalize all of these details, they have to actually write the legislative text, which you have to be careful about because, just changing a certain word in some of these provisions could change who has access to what kind of funds and how those are dispersed. So that's the process they're going through right now. We expect to see legislative text probably within the next few hours. So once we get that, we'll definitely be coming through to see where everything landed.
Okay, well, take me through that a little bit, because time matters right now. This is on the Senate side largely, right? Don't they have to convene the House to vote it through the House?
Maybe. Pelosi said this morning that she wants to do this by unanimous consent, which means that she wouldn't have to call House members back to Washington. You know, House members left town on March 14th after they passed their previous fiscal bill for the coronavirus response. So if they could do this by unanimous consent, they could do it very quickly. That is an amazing thing to do for a $2 trillion bill, but that's the way to do it quickly.
Yeah, particularly when the Constitution says it's supposed to start in the House, right? I mean, it's an appropriations. The Constitution says it's supposed to start with the House. In the meantime, have you been watching what's going on in Fox? I see the Vice President up there a fair amount, not much of the President. Are we learning anything?
Yeah, I have been tuning into that a little bit. The main thing that struck me was the question of ventilators. You know, in New York State especially, saying that it needs ventilators to handle all the influx of patients displaying these really terrible lung symptoms from COVID-19. And Vice President Mike Pence said that those ventilators are going to be released from the national stockpile, but didn't give specifics about when those would get to the hospitals that need them and how many would be available.
I must say, we've been hearing about these ventilators in the national stockpile for at least a week now. I'm not quite sure why they haven't released them already.
Yeah, and you could hear some frustration from Governor Andrew Cuomo earlier when he said, you know, it's not up to me to get these. You know, President Trump had earlier suggested the governors could try to procure these on his own, but he said only the federal government can really give us what we need right now.
Any more talk? We heard from Larry Kudlow this morning about maybe at the end of the 15-day period, which I think is just middle of next week, that maybe we'd start backing off some of the nationwide guidelines, if not restrictions.
That's a really interesting question right now. And House Speaker Nancy Pelosi just said on MSNBC that the economic gain that you would get from opening up parts of the country would be kind of counterbalanced by the worsening health crisis from doing that. So it's not like you would actually gain that much because there would still be health risks there.
Okay, I guess we'll know soon enough. Thank you so much to Anna Edgerton. She's a Bloomberg politics editor. Really appreciate having her on. So that does it for this hour of Balance of Power. In the next hour, we're going to be hosted by Paul Sweeney for the second hour of Balance of Power. I'm David Weston, and this is Bloomberg Radio.
This is Bloomberg Pursuits. Look at luxury. Homeowners are still listing their multi-million-dollar mansions, often with prices that correspond to a booming housing market. One Massachusetts seller says the worst thing that happens is nobody buys it. Indeed, a faith in market despite the economic upheaval, a desire not to deviate from long-made plans, like listing in the spring, combined with low interest rates, all are giving homeowners the optimism they need. Coronavirus's spread hasn't deterred the seller of London's Westbury Hotel either, who's betting its prime location in the glitzy Mayfair district will lure buyers even as the global epidemic batters the tourism industry. Westbury owner Cola Holdings is pitching the portfolio of 3 adjoining properties, a Burberry store, and Washington House, home to the Conduit Club, as a once-in-a-generation chance to acquire a prime safe haven asset in one of the capital's choicest areas. It could bring in north of $1.3 billion. I'm Andrew O'Day, Bloomberg Radio.
You're living in a world built on science, political and economic.
You've got to believe the labor market gets hit.
Computer and medical.
Clarify where we are on a test.
It all makes a difference.
What do you think needs to happen in terms of governmental response?
And it's all here.
He expects the virus to peak quite a long time from now.
Get your science straight.
The hand washing campaign, is this actually a good strategy?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Tom has been a teacher for over 40 years. One day, I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. I was really starting to worry.
Levi and I talked about how it would change our lives, but he was there beside me.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Why
is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are off our session highs, but it is an up day. Stocks rallying. Dow Jones Industrial Average up over 9% for the first time since 2008. Investors rediscovering some appetite for risk, with Congress looking close to an unprecedented spending bill to prop up the slumping economy. Stay with Bloomberg for the very latest. It's been a day of fast-moving developments, but we do have the latest in Washington monitoring, and we will have that for you as it becomes available. S&P rebounding from the lowest level since 2016, poised to notch a third straight Tuesday turnaround after starting the week with a rout. Here's where we stand. The Dow is up 1,644 points, higher by 8.8%. S&P up 170 points, up 7.6%. S&P, by the way, had been up as much as 8.9%. NASDAQ up now by 441 points, up by 6.5%. The 10-year down 25-30 seconds. The yield right now is 0.86%. Gold surging 4.3%, $16.19 the ounce, and West Texas Intermediate crude oil is up 0.9%, $23.57 a barrel. And now with a look at commodities trading, here's Bloomberg's Renita Young.
Those fresh stimulus measures are sending copper higher for its biggest intraday gain since 2013. Gold prices are up for the third straight day amid the fresh stimulus measures, even though it's a traditional haven asset. Logistical disruptions stemming from global shutdowns and tightness in the New York market are boosting prices. And WTI crude oil prices are off their lows after the Fed unveiled a set of measures to support the U.S. economy. Meanwhile, a Saudi-Russia oil price war continues. Renita Young, Bloomberg Radio.
And again, WTI, West Texas Intermediate crude up 1% right now, $23.57 a barrel. GM joining Ford in tapping its credit lines to stock up on cash, but the bigger automaker is signaling superiority over its Detroit rival by leaving its dividend intact. For now, GM shares surging 20.8%. 102 on Wall Street. Time now for the Market Drivers Report with a focus on American depository receipts. He's working from home, and here he is, Dave Wilson.
Thanks, Charlie. ADRs are rising even more than U.S. shares. The S&P ADR index is up 9.4%, beating the S&P 500's gain of 7.8%. And the advance in the ADR index, if it holds up, would be the biggest since October 2008. The gains in oil that you mentioned, Charlie, are lifting energy ADRs. You look at the UK's Royal Dutch Shell, its Class A ADRs are up more than 21% in U.S. trading. BP has climbed 23%, and Brazil's Petrobras risen 20.5%. Gold mining ADRs are higher as the precious metal rallies for a second day. Canada's Barrick Gold has advanced almost 11%, and South Africa's Goldfields is up more than 14.5%. India's Infosys has added 7.9%. The software services exporter said U.S. regulators concluded an investigation into a whistleblower's claims without taking action. The probe looked at whether Infosys pushed to inflate profit, among other things. Then there's China's GE. It's down 7.8%. The online payment company's fourth quarter revenue trailed analyst average estimate in the Bloomberg survey, though earnings were higher than projections, Charlie.
All right. I thank you very much, Dave Wilson, keeping track of those ADRs for us on a Tuesday here. The Dow, the S&P, NASDAQ all surging close to the best level of the day, with the S&P up now by 175 points. That is a gain of 7.8%. We've got you covered. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Balance of Power.
We have the strongest economy by far in the world.
We need an economy that works for everybody.
I am the one who has the broadest coalition.
Where the world of politics meets the world of business.
They've got the money they need to run a very competitive race.
These lawyers brought the case, and in my view, they should be sanctioned. We want certainty in the markets. We want certainty in our trading relationships.
The administration is trying to create a new divided world.
Balance of Power with David Weston on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, welcome to the second hour of Balance of Power. I'm Paul Sweeney, sitting in for David Wilson, and what a day in the markets. Markets surging in anticipation that Congress will put forth a fiscal stimulus bill rumored to be in the neighborhood of $2 billion. What we're hearing out of Washington right now, the latest reporting is that it is just perhaps hours away from getting this thing passed, and that's clearly market reflecting that. And just to show you how crazy the day is on Wall Street, Delta Airlines just rating just cut from triple B minus to double B. That's into junk territory. So what's the stock doing? It's up 22%. So with all the other airline stocks and travel stocks getting a big bid today as people take a risk on feel to the market. Let's welcome Elena Popina. She's a Bloomberg Stocks and ETF reporter. Elena, thanks so much for joining us. What's your take on what we're seeing in the markets today?
Hi, Paul. Yes, indeed, a very good day for all our industry groups in the S&P 500. Every industry group is up today, and we are seeing massive short covering as some of investors think that a decline of more than 30% since just over a month ago, since the high on February 19th, is excessive. What I was looking at is at the degree to which the number of companies that are being bought today offsets or overshadows the number of companies that are being difference today at some point in the morning was the highest difference ever. So this tells you a lot about the opportunity in a risk-on trade right now. But a big question is, now that we are in a buy the rumor, sell the news environment, will this rally be faded or shorted tomorrow?
Interesting. Elena, Abigail Doolittle, our partner at Bloomberg Television, she came out with a great chart just recently, and she says the Dow transports are on pace right now for the best day since September 5th, 1939. So just an extraordinary day in the markets. So, Elena, are you seeing volume kind of confirming this move up? I mean, are we seeing kind of good, strong volume confirming the move upward?
Yeah, the volumes are pretty strong, but I should say that volumes are different from sector to sector. For example, energy is the biggest gainer in the S&P 500, as you just mentioned, with oil going up. But the gains in, for example, technology stocks, or I'm just looking at my volume chart right now, consumer staples companies, it's not as high. So we just need to see more confirmation tomorrow or the day after tomorrow. The golden rule of thumb among traders is if you have 2 up days with volume that's up more than the 30-day moving average, above an average volume, and 2 consecutive up days. That means that the uptrend is intact, that it's quite strong. Again, we're now seeing that we did see a few very positive days over the past month that just turned into more losses. So that's definitely a trade for the brave of heart. If some of the investors are brave enough, they should step in. That definitely see today, but there is still a lot of caution, and there is also a lot of uncertainty, and a lot of that uncertainty is around the upcoming economic data. Of course, we're going to see a lot of weakness in just about every print going forward in the next month.
Yeah, it's interesting. I think we're going to see some negative labor data coming out very soon. We've got some negative PMIs that came out this morning, both here and in Europe. So we're starting to see it come into the data, and it's going to be very ugly over the next several months at least. So I guess the question is, can people look towards the other side and think about the easing accommodations, the fiscal stimulus. So, I mean, are you hearing from strategists that it's that there was some capitulation perhaps over the last couple of days, or is this maybe just a dead cat bounce here?
Yeah, Paul, that's interesting that you mentioned strategists. Strategists are abandoning their year-end targets for the S&P 500. That is so interesting because that's something that we almost never see ever, because strategists usually have an estimate on what's going to happen between now and the year-end. So what we saw today was that Oppenheimer and BMO Capital Markets both said that we see no point in forecasting what the S&P 500 is going to do between now and the year end. There's no point in that because the volatility is just so high. And more importantly, there is just no certainty as to where the virus is going to stop and what kind of damage it's going to do to the economy.
Well, going back to that's so true. And we're hearing that across the board as well. It's a little bit early to get a sense of that. Although, we saw the Wall Street houses come out over the weekend with their economic forecasts. And while they all had, big declines in the second quarter, many of them had double-digit gains in U.S. GDP in the third and fourth quarter, I guess calling for that V-shaped recovery. So I think a lot of that is predicated upon this being short rather than longer.
Yes, absolutely, Paul. And you heard during Donald Trump's conference in the evening that the U.S. economy doesn't have 3 months to be shut down. The United States cannot be closed for that long of a period. So it's all a matter of timing right now. And that's the hardest thing for investors. If we are to see the number of new cases go down in the next quarters, in the next weeks rather, we are going to see probably a V-shaped recovery. But if that doesn't happen, if we see a period of uncertainty go into August or into September, that recovery could just be sometime next year or even in the second part of next year. That's some of the most bearish strategists at Wall Street predict.
Elena Popina, thanks so much for joining us. We appreciate your perspective. Elena is Bloomberg Stocks and ETF reporter joining us on the phone. Looking at the markets again, still very strong. Lots of volume, as Elena was suggesting. So, the question for a lot of investors is just trying to get a sense of where are we in this cycle here with the market? Are we near the bottom? Is this simply a dead cat bounce? Or does this reflect fundamentals, which is simply stimulus coming into the marketplace? Coming up, we're going to speak with Aaron Kessler, Managing Director and Internet Analyst at Raymond James, been covering the tech space for a long time. He's done some survey work about consumer behavior post-coronavirus in terms of what they think they will do in terms of their spending. Very interesting impact on a lot of consumer industries. This is Bloomberg.
Leaders are born.
What does it take to get the markets back on the rails?
Born leaders are here.
The timeline for that can be slow.
Karen Moscow.
Several nations are negotiating to evacuate diplomats.
And Nathan Hager.
How are you advising clients to navigate the shifting headlines?
Bloomberg Daybreak, weekday mornings at 5 Eastern.
Are we heading into correction territory, do you think?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Okay, kids, Dad's gonna teach you how to dance. First, spread your feet apart. Then, pump your knee, nod your head, shake your hips, and bite your lip ever so slightly. Now, with one hand in the air, point at people with the other hand. I call that the rock star.
Dance like a dad. It's a great way to make a moment with your kids.
Now, make a face like it just smells something bad.
Visit fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
The Bloomberg Business of Sports podcast. How did the Yankees?
In the left passenger seat, we've got Dan the Widowmaker. In the right, Face Smash Steve. Oh, a solid left hook from Steve. Blocked by Dan. Dan's got him up against the ropes. Going for a signature pile driver slam. But Steve's wriggled away like a greasy snake. And Steve's got him in a chokehold. He's got him! He's got him!
Boys, pack it in back there. I'm trying to drive.
Sorry. Your mate's more likely to crash with passengers in the car. So don't drive him to distraction. Let a mate concentrate.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Play Thursday, and you could make every month amazing with Set for Life and the National Lottery. Your numbers make amazing happen. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
It's TuneIn Sports on this day. March 24th, 2019. 2-time American League MVP Mike Trout signs the biggest contract in North American sports history. A $426.5 million 12-year extension with the Los Angeles Angels.
You know, when it came down to it, it was about, family. And I just, seeing everybody and knowing that I'll be here, for a long time, it means a lot.
To listen to conversations breaking down the moments just like this, click on sports to be part of the discussion on TuneIn.
That's something that you can't teach.
We rely so much on a resume, yet it could never tell the full story of someone who
had to be independent and take initiative, and that's how I handle every project I get.
Discover new ways to develop great talent at gradsoflife.org. Brought to you by Grads of Life and the Ad Council.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, and NASDAQ all surging today. Dow Jones Industrial Average up as much as 9.9% for the first time since 2008. Investors rediscovering some appetite for risk. Congress looking close to an unprecedented spending bill to prop up the slumping economy. It's a topic we're on. We've got more for you coming up right here on Balance of Power. S&P 500 index rallying 160 points right now, higher by 7.1%. The Dow surging 1,546 points. That is a gain, as I speak, of 8.3%. Fast-moving market, so NASDAQ up 407. That's a gain of 5.9%. Big question, will these gains stick right through the closing bell? Of course, you're going to keep it locked into Bloomberg Radio for the very latest. We've got the 10-year down 11/32 right now. That yield 0.82%. Gold up 4.7%. $16.25 the ounce. West Texas Intermediate crude now retreating by 11 cents. That's a drop of 0.5%. $23.25 a barrel on WTI. And of course, as I mentioned, you'll stay with us through the close and also find out how those Asian markets react tonight. Again, recapping here, S&P up 156 points, higher by 7%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues. Once again, here's your host, David Weston.
From the Bloomberg Interactive Broker Studio, it is Paul Sweeney. Charlie sitting in for David Weston. We cut him loose. This is the segment I'm really looking forward to. Aaron Kessler, longtime technology analyst, managing director, and internet analyst at Raymond James. He and his team of folks at Raymond James have done a survey of consumers about their behavior. And this is post-coronavirus hitting, so some very interesting data. Aaron, thanks so much for joining us. What are some of the key takeaways of the survey work you and your team did?
Yes, we did a survey last week of kind of initially what consumers were thinking about the impact of coronavirus. Clearly, consumers are concerned. Some of the results showed about 90% of consumers were quite concerned for their family's health. About 79% are concerned over the impact to their income and jobs, which obviously directly impacts purchasing behavior near term. 74% plan to spend more time at home. In terms of what they're doing at home, a lot of these are going to be doing more streaming video. That's 44%, so they will be watching more streaming video. In terms of discretionary spending, obviously a key concern. About 61% do plan to reduce discretionary spending, so that is a key issue as well. What we have seen is more people shifting to online spending. So we cover Amazon. We think they've been a near-term beneficiary. We cover Chewy. We think they've been a near-term beneficiary of more online shopping. But it does depend by category. At the same time, we've seen less online advertising. Twitter came out yesterday, reduced estimates. We think advertising demand dropped off 30 to 40% for Twitter, based on what they said yesterday as well. So seeing a pretty different mix of results here, but overall a cautious consumer near term. I think the question, as everyone wants to know, is how long does this last? So I think we're going to stay tuned for that and monitor the data as it comes out.
Yeah, I was just looking at your report, Andrew, and it goes across a number of sectors, consumer-facing sectors. What were some of the winners or losers and winners? I can't imagine there are too many winners, except maybe at Amazon or something like that, or Chewy. But were there sectors that kind of stood out to you guys?
Yeah, near term, I think there's obviously probably more losers than winners. I think the winners, in our view, is consumable categories. So food, consumer staples, those have been viewed as more defensive plays. So Amazon, a lot of consumer staples, a company like Chewy, where people are ordering pet food, that's pretty resilient. On the other hand, generally advertising, more discretionary type of purchases are going to be more of the losers near term. And advertising, we think, definitely saw some weakness in demand recently as well.
So, Aaron, I know you spent a lot of time covering the internet sector, a lot of experience there. So let's talk about internet advertising, or just advertising in general. Obviously, it's going to take a big hit. We've seen that before when there have been shocks to the system, whether it's 9/11 or a .com crash or anything like that. How do you think about, on the other side of this, how do you think winners and losers might shake out in terms of advertising?
Yeah, I mean, the nice and the negative thing about online advertising is you can shut it off really quick, but then you can also turn that back on really quick. And I think that's what we've seen over the last couple of weeks is some of the ad campaigns got canceled or slowed pretty immediately. On the other side, as we come out of this situation, we think budgets can come back in pretty quickly. I would say most of the companies that we cover in the online ad space have very strong balance sheets, so not worried on from a liquidity or balance sheet perspective. And historically, when we have seen declines in the industry, it has shifted more dollars to the online space versus traditional media. We think so on the opposite side of this could even be a beneficiary. And you are seeing actually consumers spend more time in these apps as well. I think Twitter noted they're seeing an increase in usage, time spent. I think we've seen that with Snapchat as well. So people are staying home more, spending more time on these apps, but near-term advertising dollars are falling off.
So again, on the you mentioned another name, Amazon. That's obviously been a name people have been thinking about. That people staying home, getting more and more goods delivered. You think that might have the potential for actually, when we come out on the other side of this, of accelerating the shift away from bricks and mortar to online?
Yeah, I mean, that obviously has been a trend. We think potentially you could see some more acceleration. We already think a vast majority of Americans, probably 65-70%, are already Prime subscribers. So it has the potential to drive even more Prime adoption. But sure, we think overall e-commerce still sub 15% penetration. Still think that could at least double over the next 10 years or so. So still a lot of upside for online penetration over the near term. And near term, obviously, accelerating that trend.
How about the other names on the advertising side? Facebook, Alphabet. You think that they will bounce back once we get to the other side of this as well?
We definitely do, and they both have large cash positions, so we would be looking to add as they sold off here. Near term, we do expect there's numbers at risk, as we saw with Twitter. Google has good exposure to the travel industry, which we think is over 10% of their revenue. So clearly some near-term risks on numbers, but on the other side, valuations have sold off here, and we think they can come back strong as we get to the other side of this.
Aaron Kessler, thanks so much for joining us. We appreciate your time and sharing the data from your survey work that you and the consumer team at Raymond James did. Give us a good sense of consumers clearly are concerned and will impact their incomes, their spending, their discretionary spending, some big ticket items. And so a lot of companies are trying to react to that and adjust to that. Coming up, we're going to speak to Neil Bradley, Executive Vice President at the Chamber of Commerce, get a sense what the early signs are from the U.S. businesses as they try to deal, again, with the coronavirus and the impacts to the business. Many businesses shutting down, curtailing business, laying off workers. You know, everybody's just trying to get a sense of how bad will it be, certainly in the second quarter. Will it continue into the third quarter, or we see some rebound in the second half of the year? We'll speak to Neil about that. Right now, markets are up, green on the screen. This is Bloomberg.
This is a Bloomberg Money Minute. Investors are celebrating a huge stimulus measure that seems to be gaining traction in Congress. The legislation would offset some of the economic damage caused by the coronavirus pandemic and could be approved today. The Dow is up 9%, the S&P up 8%, the Nasdaq climbing 7%. The International Air Transport Association says the global airline industry could lose $252 billion in revenue this year. That's 44% of its total for 2019. The Ford Motor Company was downgraded by Fitch Ratings, says COVID-19 sends shockwaves through supply chains and wipes out demand across the auto industry. But with demand for home grocery delivery skyrocketing, Instacart says it wants to hire 300,000 full-time grocery shoppers to meet demand. Donna Wilson, Bloomberg Radio.
Imagine being fired because of who you love. Imagine being denied medical treatment because of who you marry. Imagine being evicted because of who you are. Millions of Americans don't have to imagine this. They have to live it. Because in 31 states, it's legal to discriminate against LGBT people. Get the facts at beyondido.org. Brought to you by the Gill Foundation and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. What if you could keep the top economic experts in a conference room next to your office without...
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home. It's Tune In Sports on this day. March 24th, 2019, two-time American League MVP Mike Trout signs the biggest contract in North American sports history, a $426.5 million 12-year extension with the Los Angeles Angels.
You know, when it came down to it, it was about, family. And I just, seeing everybody and knowing that I'll be here, for a long time, it means a lot.
To listen to conversations breaking down the moments just like this, click on sports to be part of the discussion on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Entrepreneurs, simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Have you ever thought, I wish I'd had that information sooner?
Talk to us about applications.
Let's fix that.
You own a number of brands.
Bloomberg Business Week, weekday afternoons at 2 Eastern on Bloomberg Radio. Bloomberg Business Week, now live on YouTube. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Balance of Power with David Weston.
Coming up, Neil Bradley, Executive VP of the Chamber of Commerce. We'll get a sense of how the business impact is unfolding across Main Street America and when will the U.S. economy open up again. But first, let's get a business flash from Charlie Pellet. Charlie, what do you have?
Thank you very much. Well, let's begin right there with when will the economy open up? President Trump saying moments ago in the headline from the Bloomberg Professional Service, President saying he would love to have the U.S. economy open by Easter. Easter, of course, Sunday, April 12th. Stocks are surging today ahead of any word on stimulus. We have got the S&P up by 169 points. That is a gain right now of 7.6%. The Dow surging 1,641 points, up 8.8%. NASDAQ rallying now by 435 points for the NASDAQ Composite Index. That is a gain right now of 6.3%. 10 years down 18.30 seconds with a yield right now of 0.84%. Savita Subramanian is head of U.S. equity strategy and quantitative strategy at Bank of America Merrill Lynch, and she told Bloomberg Television this morning this is a great environment for stock pickers.
A lot of this is just about positioning, de-risking, taking down exposure to equities. We've seen a lot of ETF outflows, so I think what that's done is it's also just kind of punished swaths of stocks rather than distinguishing between, more cyclical versus defensive companies.
And right now we've got gold surging 4.5%, $16.23 the ounce. West Texas Intermediate crude up 0.7% right now, $23.49 a barrel. Again, repeating the headline from the Bloomberg Professional Service, President Trump says he would love to have the U.S. economy open by Easter, a topic we'll be having more about coming up in just a moment right here on Balance of Power. Again, recapping those equity numbers, they are big. Got to stay with Bloomberg right through the close to see how things shake out and, of course, how Asian markets react tonight. But the S&P up now by 167 points. That is a gain of 7.5%. Again, gold up 4.6%, $16.24 the ounce. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues. And once again, here he is, your host for today, Paul Sweeney.
Thank you so much, Charlie Pellet. I'm Paul Sweeney, sitting in for David Weston. And that comment from President Trump, very interesting, that he would like to get the economy back open by Easter, April 12th. Let's get a sense of whether that is realistic. Neil Bradley, Executive Vice President at the Chamber of Commerce. So, Neil, let's just start there. Over the last several days, President Trump has started to raise the dialogue about when the economy should start to open up again and balancing that versus, obviously, the continuing health risks from the coronavirus. So now it appears that he was just mentioning Easter. Does that seem reasonable to you?
Well, Paul, thanks for having me. We certainly hope Easter is a reasonable deadline. The members of the U.S. Chamber want to get back to work and get back open for business as soon as possible. Ultimately, we need to be guided by the public health officials, and that may mean exactly what you were just hearing about in your last news segment, which means it may be some staggered openings. We may be able to reopen in some places before others, but wherever health officials tell us that it's prudent to get back to work and in the manner that we can get back to work, we're eager to do it.
So, Neil, give us a sense from your members at the Chamber of Commerce. How bad are they? How bad are they now, and how bad do you fear they could get in the coming weeks and months?
Well, for a lot of businesses, particularly on main streets all over America, you've had a cessation in commerce. There is no business and there is no revenue, and it is impossible to remain an ongoing concern and to pay your employees when you have no revenue. And so that's not true for every business. But if you look across the country, there are thousands and thousands of businesses of all sizes and really across all sectors for whom that is true. And that's why we think that the package that we hope to see pass the Senate today is so critically important. What we're really looking for is a bridge that for however long we're shut down, hopefully it's even before Easter, but for however long it is, that there's a bridge so that employers of all sizes can stay viable and to the maximum extent possible continue to pay their employees. That's how we come out of this and how we reopen quickly when the public health officials tell us that it's safe to do so.
On average, that's clear, and that's I guess the question is what senators are kind of weighing is how much money is given directly to consumers versus how much money is given to businesses, small and large, to keep those employees employed in the first place. So what are you hearing? I mean, it seems like the businesses really need some help right now. If they received it, do you think that they would be able to keep some or most of their employees on the payroll?
I do. I've been talking to businesses all across the country, but they believe if they can get some assistance quickly, they can maintain their payroll and they can be ready to reopen. However, time is not on our side on this. And, I was talking to a business yesterday, and they were trying to pin me down on, well, which day is this going to pass the Senate? Which day will it become law? When will we be able to get access to that small business loan? Because they're literally looking at their cash outflows and when they're supposed to pay their employees to figure out how long that they can make it. And so, all the bickering that's going on, all the politics that's consumed this in the last 24 hours on Capitol Hill is only making it more likely that people end up in unemployment. And that's the last thing we want if we want to come out of this quickly.
So just that goes to a good point I want to raise. The average small and mid-sized business, how much cash do they have? How long can they last? It's not like I'm looking at the balance sheet of Google and seeing, a gajillion dollars on there. A lot of these folks are really running lean to begin with.
They're running very lean, and of course it varies from business to business. But 2 to 3 weeks in some instances, depending on. Remember, it's not just their payroll; it's when's their rent due on their store? When do they have a debt payment? So it really does matter their individual situation. But they have to see that there's some lifeline. If that lifeline is coming, if that bill's going to get enacted by tomorrow, a lot more businesses are going to be able to make it through this. If it's not coming, we're going to have a lot more layoffs, and some of these businesses are never going to come back. We see what happens in a natural disaster. When a natural disaster, too few, particularly small businesses, are able to come back when the natural disaster is over. We can't afford to let that happen here.
So the coronavirus is rolling across the U.S. in kind of an uneven way, different areas being hit differently, some harder than others. Are you seeing that from the business perspective as well? Some areas of the country are actually doing a little better maybe than some others?
Yes, as a general matter. Obviously, areas where we've had shelter-in-place orders for public health reasons, you have less commerce than in others. But I will tell you, I was talking to a small business outside of Atlanta a couple days ago, and they hadn't been affected yet by a shelter-in-place order or anything like that. But their customers are folks who put on shows and events, and they go to those shows and events. So their business is effectively shuttered because none of the activity that they serviced is occurring. So it's really hard to say that, well, here's a couple places in the country where everything must be fine. There are businesses hurting literally in every county in America.
Yeah, absolutely. Neil, thanks so much for joining us. We really appreciate your perspective from the small and mid-sized business owner. Neil Bradley, Executive Vice President of the Chamber of Commerce, really looking intensively, as all businesses are, at this bill that is pending within Congress, this fiscal stimulus bill. Again, we're hearing from members of Congress that they are confident that they can get this passed today. We heard some of that rhetoric yesterday as well, so take it with a little bit of a grain of salt here. But the markets clearly like what they're seeing here. I think the expectation is the Fed has done essentially all that it can realistically do in the near and intermediate term with the fiscal easing and quantitative easing they announced Monday morning at 8 a.m. Now it's up to Congress to really put some resources behind this fiscal stimulus. Help the consumer, number one. Number two, help the small businesses that employ so many Americans. Keep them on the payroll for a certain limited period of time until we can get to the other side of the coronavirus. That seems to be the strategy that we're seeing out of both sides of Congress here as they try to craft this bill, get their differences kind of resolved, and get a bill to the president's desk. The president said that he is eager to sign that and get money into the hands. Right now, we have S&P up 7.5%, Dow up almost 9%. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve?
At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
Dave presents an evening of exclusive stand-up comedy in association with Calm, featuring Joel Dommett.
I was like, Dad, do you love my brother more than me? He went, I've just got more in common with him.
Kiri Pritchard McLean.
They're either holding an ugly baby or a heavy fish. I don't know why it's those two.
Judy Love.
Where's all my big girls? Okay, some of you been lying to yourself.
And John Robbins.
Never got my head round why 100% humidity wasn't water.
An exclusive stand-up special. Comedy against living miserably. Tonight at 9 on Dave.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home. It's Tune In Sports on this day. March 24th, 2019. Two-time American League MVP Mike Trout signs the biggest contract in North American sports history. A $426.5 million 12-year extension with the Los Angeles Angels.
You know, when it came down to it, it was about, family. And I just, seeing everybody and knowing that I'll be here, for a long time, it means a lot.
To listen to conversations breaking down the moments just like this, click on sports to be part of the discussion on TuneIn.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shaw is Senior Project Engineer at Mott MacDonald. a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor, is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that so in 10 years we're actually ready to take on those challenges when we have our first development in the water? NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are off session highs, but it is an up day. What a day with the Dow, the S&P, and NASDAQ all rallying. The Dow up as much as 9.9% for the first time since 2008. Investors rediscovering some appetite for risk. Congress looking close to an unprecedented spending bill to prop up the slumping economy. We're monitoring developments in Washington. We've got our reporters there, and we will have details as they become available. Here's where we stand. The Dow now up by 1,582 points. That's a gain now of 8.5%. The S&P up 161 points, up by 7.3%. And NASDAQ is up 420, up now by 6.2%. The 10-year down 14.30 seconds. The yield now 0.83%. Gold is up 4.7%, higher by $72 the ounce at $16.25. And we've got West Texas Intermediate crude oil pushing higher now, up by 1% on WTI, $23.29 for a barrel of West Texas Intermediate crude. So bottom line, S&P rebounding from the lowest level since 2016, poised to notch a third straight Tuesday turnaround. We'll find out for sure. Stay with us right through the closing bell, and of course, we'll find out how those Asian markets react tonight. Again, recapping here, the S&P up 159 points, up 7.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues, the Tuesday edition. Here he is, Paul Sweeney.
Charlie Pellet, thank you so much. From the Bloomberg Interactive Broker Studio, I'm Paul Sweeney, sitting in for David Weston. Well, the question is V, U, L, or some other letter that we haven't thought of yet. I'm talking about the economy. How will we, let's assume we're already into a recession, how will we come out of it? We are very pleased to have Lindsay Piegza, Chief Economist at Stifel Nicolaus, with us. Lindsay, I assume we're into a recession right now. How do you think it will progress over the next several quarters?
Well, you're right. If we're not technically in a recession right now, we will be soon, or at least that's our expectation. Going forward, after the hardest hit in the second quarter, however, we do think it's going to be a pretty slow, tepid, U-shaped rebound, as opposed to that preferable, faster V-shaped rebound back into positive territory. I do think it's going to be a very slow return, not getting back to that pre-corona trend pace of expansion until late 2020, if not into 2021.
So that's interesting, because I've been reading over, some of the reports from your competitors on the sell side, and some of the large houses have clearly V-shaped recoveries. What do you think is the difference between a V and a U in terms of economic stimulus, just timing, how the consumer, all those things that really make up GDP?
Well, I think it's a lot of combination of how the bounce is going to look. A lot of the other forecasts, as you mentioned, are looking for, in some cases, 15-20% decline in the second quarter, but then followed by a 10% positive increase in the third quarter. Well, they're making the assumption that these businesses that have been put out, workers that have been temporarily laid off, immediately snap back to full productivity. And I think it's going to be a much slower process than that. Some of these businesses aren't going to be able to immediately reopen their doors. Some of these businesses are going to struggle to get those workers back online. Some of these businesses are going to have difficulty reaccessing supply chains. And so it's going to take some time to get our ducks back in a row. And even when we start to see them come in a row, some of those ducks are going to be missing permanently. So I do think it's going to be more of, again, this slow U-shaped. Believe me, a V-shape would be much more preferable. And I wish we did see that. But unfortunately, I do think it's just going to take some time.
Yeah, you're concerned about some of the small, mid-sized businesses. That was echoed just earlier in this program by someone from the U.S. Chamber of Commerce, and that's clearly a concern here. So based upon, first of all, how ugly do you think the employment numbers are going to get over the next several weeks and months?
They could get pretty ugly, as we're talking about claims rising likely over the 2 million mark this week. We could see a very precipitous rise in the unemployment numbers. But again, it's not necessarily how high does it go, but how fast can we bring that back down? Is this a reflection of temporary displacement, or is this a reflection of a longer-term structural displacement, as many of these businesses aren't able to reopen their doors? Remember, coming into this, the economy was already on fragile footing. We seem to forget that. We were talking about just 2% growth. And that 2% was coming on the backdrop of massive government spendings, trillion-dollar deficits, and already record low rates. So it's not as if we were starting from an extremely hot economy. We were already losing a lot of momentum. Many of these businesses were teetering already before the coronavirus hit. So again, this just strengthens the argument that it's going to be a very slow rebound on the recovery end.
So, Lindsay, based upon what we know from public reporting about the proposed fiscal stimulus plans currently being debated in Congress, what are your thoughts about what we're seeing, what we might see? Is that enough, or is that just kind of the first salvo?
Well, I do think that it has to be a multi-pronged approach. And what we've seen is that the Fed has done an ample amount to keep financial markets functioning, essentially pulling out a card of whatever it takes, unlimited asset purchases. They've been announcing liquidity programs on a daily basis. And so we do have that aspect coming out strong. The fiscal side is coming out relatively slow. There are some notions that it's going to be coming down the pipeline, but I do wonder if it's going to, the final result is going to be plugged with different types of pork here and there, as opposed to actually accessing some of the issues, which is helping the workers, helping businesses that are struggling. And I just don't know, depending on the depth and duration, if it's going to be enough, if it's going to really be able to stem off that more dire depressionary scenario, or even soften our base case, which is a recessionary scenario.
So, the G7 earlier today, Lindsay came out and said, quote unquote, they will do whatever it takes. Is that rhetoric, or does that mean something to you, given how quickly the virus is spreading across Europe?
Well, again, it does help boost confidence that officials are ready to take extraordinary measures to help backstop the economy, backstop the financial markets. But remember, this isn't a structural dysfunction in the markets. This is a health issue. And so there's only so much government can do to actually solve the problem, which first and foremost is containing the virus and getting an antibody or getting a vaccine available for the public. So that really is the only way that we're actually going to move beyond to this problem. Secondarily, of course, yes, we want fiscal and monetary backstops to help cushion that economic blow. But it has to be a multi-pronged approach. And even though officials are energetic and willing to be out there, we have to see this stopped from a health standpoint, first and foremost.
So finally, Lindsay, what is the Stifel GDP call by quarter for 2020?
You're going to make me quantify it, right?
Yeah, absolutely.
For the second quarter, we are looking for a near 16% drop, so 15.8. Okay. The third quarter, however, we're not as optimistic as some of our peers. We still see a negative drop in growth by 4.5%.
Wow.
It's not until the fourth quarter that we eke out positive, very minimal, but positive growth, less than 1% at year end.
So for the year, you're down mid to high single digits?
For the year, we're down over 5%, 5.3%. Yep.
Yep, interesting. Okay, we'll see how it plays out. Interesting times. Second quarter certainly going to be the roughest. The question is, how long will it take? And that's kind of the game right now. That's the call right now. Lindsay Piegg is a chief economist at Stifel Nicolaus. Thank you for joining us. We appreciate that. Again, the real question here from an economic perspective as we look here for fiscal stimulus coming out of Washington, will it be enough? Will there be a need for more stimulus? And if so, what does that mean for economic output in this country and around the world? Will it be a V? Will it be a W, an L, or something else? We will have that for you, of course, with our ongoing coverage. Coming up, Bloomberg Business Week with Carol Massert and Jason Kelly. I'm Paul Sweeney, and this is Bloomberg.
Dave presents an evening of exclusive stand-up comedy in association with Calm, featuring Joel Dommett.
I was like, Dad, do you love my brother more than me? He went, I've just got more in common with him.
Kiri Pritchard McLean.
They're either holding an ugly baby or a heavy fish. I don't know why it's those two.
Judy Love.
Where's all my big girls? Okay, some of you be lying to yourself.
And John Robbins.
Never got my head round why 100% humidity wasn't water.
An exclusive stand-up special. Comedy against living miserably. Tonight at 9 on Dave.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
It's TuneIn Sports on this day. March 24th, 2019. Two-time American League MVP Mike Trout signs the biggest contract in North American sports history. A $426.5 million 12-year extension with the Los Angeles Angels.
When it came down to it, it was about, family. And I just, seeing everybody and knowing that I'll be here, for a long time, it means a lot.
To listen to conversations breaking down the moments just like this, click on sports to be part of the discussion on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Our relationship with Asia is simple. Find the most experienced journalists.
These countries will need each other more and more in the future.
Let them gather the best data and experts.
Let's get to Singapore now and our guest.
Then bring everything they find straight to you.
Let's talk about where you are. There's quite a lot of headwinds there too.
Actually, it's not simple. It's just better. Bloomberg Daybreak Asia, tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massert and Jason Kelly on Bloomberg Radio.
Live from our homes in the Metro New York area, welcome to Bloomberg Business Week. It is Tuesday, March 24th, 2020. Carol Massert, along with my co-host Jason Kelly. And Jason, risk on. We've got stocks rallying. The Dow Jones Industrial Average up the most for the first time since 2008. Investors taking on some risk. It all has to do with everybody just kind of watching what's going on in Washington.
Well, in the same way that folks were negative seeing all the headlines out of Washington yesterday, feeling a little more positive based on what we're hearing from both sides of the aisle, from the president himself, his economic advisors, his Treasury Secretary, everyone pointing to a deal. So that certainly is the expectation that has people, as you say, a little bit more with an appetite for risk.
All right, we'll get to that all over the next few hours. First up, though, let's check in on your top business stories. Let's check in with Charlie Pellet. Hi, Charlie.
Well, hello there. Working from home as well. We've got the Dow, the S&P, and NASDAQ all surging right now. Off our session highs. Worth pointing out that at the best level of the day, the Dow was up 1,848 points. That was a gain of 9.9%. Here's where we stand right now. We've got the Dow up 8%, rounding up, yes, 7.93%. We'll call that 8%. We've got the Dow up 1,476 points. S&P up 145 now, up by 6.5%. And NASDAQ up 370. That is a gain of 5.4%. 10-year down 1930 seconds at yield 0.84%. Gold up 4.7%. 16.26 the ounce. And West Texas Intermediate crude all over the map today, slumping now by 1%, down at 23.14 a barrel. So the Dow surging, investors rediscovering some appetite for risk. Congress looking close to an unprecedented spending bill to prop up the slumping economy. Yes, we'll be covering that for you right here on Bloomberg Business Week throughout the afternoon. Stay with Bloomberg. Keep it locked in. We've got you covered. Markets and more. Find out how things shake out at 4 o'clock with the closing bell. And, of course, how those Asian markets react tonight. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We'll be checking in with you throughout the show. Coming up, Carol, we're going to talk about this growing divide, as it were, between what we have in terms of the equity markets. We've heard all the numbers, but also this growing still health crisis. We're feeling it acutely here in the New York area for sure. We heard from the governor of New York earlier about just a dire situation.
Right, exactly. And you said it correctly, Jason. It's just about, investors certainly back into the market, and there are folks that are saying it's time to reopen the economy, but if you talk to many folks where we are hit the hardest, folks are saying we're not even close to dealing with the healthcare situation. All right, we're going to be talking about that. We've got several leaders to turn to today. We've got the CEO of a major healthcare system in the Midwest, the president of an Ivy League institution, and an investor and entrepreneur in the streaming sports and entertainment space. There's a lot going on as we get through this crisis, and with a lot of us spending an awful lot more time at home. And then we've got someone who is thinking a lot about what's happening in our world now, because he's been creating a company that focuses on being fit, your time on the planet, and your quality of life.
Really excited to talk to the founder, chairman, CEO of Lifetime. This is a brand well known throughout the country for its fitness offerings. Obviously, their world has changed dramatically. And as you say, he's been thinking a whole lot about what to do for his employees, his members, and all of his constituents, and really society at large. In the meantime, let's set the Business Week agenda. We're going to start with Dave Wilson. He is our stocks editor, of course, also the author and the chart of the day. And in a minute, we're going to hear from Gina Martin Adams, our chief equity strategist. Dave, I want to start with you. Help us understand the tone in the market today.
Well, it's just a broad-based advance here. You've got energy stocks at the forefront, given that oil prices are holding up, at least after the declines we've seen the last few weeks. I mean, you're seeing some pretty substantial gains, too, in a lot of the stocks that have been beaten up over the past few weeks. You think about Norwegian Cruise Lines or American Airlines or MGM Resorts. I mean, there are plenty of stocks like that. And if you look at what's down in the S&P 500 now, there aren't that many stocks, only 33 at this point. What's notable, though, is that we're seeing weakness among real estate investment trusts, and that looks like a real area of concern for investors, specifically when you look at mortgage REITs, the ones that invest in mortgage-backed securities, that lend money for properties. I mean, we're seeing some companies in that area, smaller ones, certainly not S&P 500 level, that are having trouble keeping up with all their demands for money. A couple of them specifically, Invesco Mortgage Capital, ticker IVR, and New York Mortgage Trust, ticker NYMT, have actually come out and said, we can't meet margin calls at this point, and their shares are taking a beating because of that, and it's resulted in some weakness across real estate at this point.
Yeah, and we've certainly seen that play out in the mortgage market, and that is one of the bond markets, the mortgage bond market in particular, that has not seen the bounce back or at least ease of concerns that we've seen in other aspects of the financial markets. So yeah, that makes sense that we're seeing some of an impact. Gina, come on in. I was listening to you this morning, listening to you on Bloomberg Radio. So where are we? Can we assume that once we get through this that, everything's going to kind of get back to normal for companies and that we bounce back? What are your projections here?
Well, I think that's a tough question. I don't know that we get back to normal precisely, because I think we are in the process of kind of trying to figure out what normal looks like as we address the crisis, as we address the health concerns, as we address our infrastructure and our capabilities of dealing with this. I think we will continuously kind of reassess how businesses will function over the course of the next 6, 12, maybe even longer. That's 6, 12 months or maybe even longer. What I will say in terms of the equity market that I think is very relevant right now, what you do find almost every period is the equity market's going to bottom before the fundamentals bottom. We bottom on average about 250 days, 235 to be precise, before we reach our earnings bottom. We average in most cases about a year before we make our economic bottom. We find a bottom in equity prices. So when you ask the question sort of where do we go from here, the relevant equity market question is what have we already priced in, and how much more do we really need to price? When we look at what we've priced in, we've already priced for a much deeper than average recession experience in the earnings outlook. So now it's a question of timing. How long does it last? How deep does it get? Does it last beyond September? Because that seems to be about what we've priced. Does it go to December? Does it go to next March? Those are the questions investors have to ask themselves at this point.
And so, Gina, what about this divergence, as it were, between the health crisis and investor, for lack of a better term, enthusiasm? I mean, is the market still paying attention to mortality rates and spread and all of those things?
I think so. I think the market is definitely paying attention to those. You know, if you look at where we are today, we've had a tremendous bounce back, but all we've done is gone back to Friday's levels. So we're back to where we were a couple of days ago. I think that the market is also trying to price in what has been an extraordinary effort on the part of policymakers. You know, yesterday we just had an absolute bazooka of Fed stimulus announced in many ways, and now we're starting to price in a potential for fiscal stimulus, which that's a game changer too. So while we're absolutely trying to plot the path of virus contagion and figure out how to slow that pace of increase, at the same time we are getting the supports necessary to try to stabilize the equity market and certainly try to provide the economy some shelter from the inevitable fallout.
Right. And I do wonder about, I've heard a lot of conversations about, getting money into the hands of people, but, right now they've got to have some security that they're going to be, what's really more on everybody's mind is that they're going to have a job that they certainly come back to or that companies hold them onto, and that's crucial for companies keeping going. Gina, thank you so much. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, on the phone from New Jersey. Dave Wilson, also with us, our stocks editor at Bloomberg News, on the phone from New Jersey. So you are listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. Interesting Bloomberg Business Week bite of the day.
I really like this one.
Yeah, it's $14 billion, nice and round.
Yeah.
And it goes to what we were talking about yesterday, Jason.
SoftBank planning to sell about $14 billion of shares in the e-commerce leader Alibaba Group. It's part of an effort to raise $41 billion, flipping the numbers there, to shore up businesses battered by the coronavirus pandemic, according to people with knowledge of the matter. The Japanese conglomerate considering raising the remainder of the money by selling a stake in SoftBank, its domestic